But copper's been pushing higher.
But copper's a little higher. Iron ore is a little softer. Copper's a little softer right now. But yes, that upside has come through from copper. Rita Sen telling us she's around $85 a barrel on oil.
So we're expecting a positive performance, much to the annoyance of Kriti Gupta this morning out of European markets. But it does look like the US is going to bounce back. But today feels a little quieter. We often say this on a Monday. Rest of the week, though, I think could be quite the week.
Yeah.
We are going to see an awful lot of earnings coming through. The European banks are going to be fascinating. Big tech, obviously a very big focus.
You know, for me, it's all about the consumer. Nestle, Unilever, those are the questions I have. There's a headline coming out this morning around Unilever. They may struggle to find a buyer for their ice cream business.
I'd like to put my hand up.
Yes, I'd like to put my hand up as an ice cream fanatic. But that's going to be an interesting one as well, because I'm curious about the price hikes there. I'm curious about the supply chain issues there. I believe they're reporting, I want to say Wednesday or Thursday.
So they've been real underperformers.
They have.
So this whole sector has been an area.
But you make the point as well. Sorry, go ahead.
No.
Well,
if I'm making a good point, I'm willing to hear you talk about it.
I will make an exception on the Guy Johnson kind of flak train, but. You made a really good point about it being a potential inflation hedge, that if you're concerned about this, then do you hop back into not only the commodity names, but the consumer names as well?
Could help the top line. Actually, to Tom's point, the miners are softer this morning. That's the only area in which we're seeing significant softness this morning. Rio's down, Glencore's down. What is up, though, are, in terms of the points, HSBC, Shell, AstraZeneca, Unilever, GSK. So it's kind of the other side of the fence in terms of what's happening. Banks and drug stocks. Unilever up by 1.21%. Pretty
interesting. Yeah, so we keep across that one in the ice cream story around Unilever. As you say, they've had that restructuring challenge, haven't they? And the softness that's come through more broadly for that stock. The bank, we talk about the bank earnings out of Europe, the investment banking part of the business. You flagged this, Guy, prior to the open around Deutsche Bank and others within that space, the French lenders as well, in terms of whether or not the pickup in some of those deals is going to really start to come through in a significant way for some of the European banks.
And how's the trading? What's the trading story going to look like as well? I think it's going to be interesting. After we saw that Goldman Sachs sort of blowout number, it did so well. It's also worth flagging this morning, and this is something that Bloomberg's reporting obviously front ran. The SNB, the Swiss National Bank, is going to raise the minimum requirement for banks in Switzerland. It's a fairly chunky increase as well, but to a certain extent, I suspect that has largely been priced in as a result of the story that Bloomberg wrote a couple of days ago. Let's talk a little bit about what the rest of the week is going to look like. Let's talk about what the earnings story is going to look like as well, and how this market is going to set up. The growth story, obviously, is the backdrop to all of this, and there's a lot of macro data out this week, and there's a lot of corporate earnings this week, and it's going to be really interesting to see kind of which one of these two factors ultimately ends up being probably the biggest factor for markets. On Friday, we spoke to Scarlett Montgomery-Koenig about all of this.
We're getting more optimistic on global growth. We're definitely seeing a bottoming in Chinese data, and that's meant that there's been a broadening of the rally, and you've actually seen U.S. equities underperform or perform more in line with other markets. And equities in particular, what you've seen is that there's been that broadening in Europe, and European tech has done quite well as well. The other thing is the cuts. It's certainly that we've had stagnation this year. The ECB is tight, and so you need cuts this year to see a rebound in growth in Europe for 2025.
Okay, T.S. Lombard, Scarlett Montgomery-Koenig speaking to this programme on Friday. Joining us now, very pleased to say, is Helen Jewell, CIO for EMEA for Fundamental Equities at BlackRock. The sell-off on Friday, we're seeing a little bit of upside coming through in European stocks, futures in the US pointing positive as well. Would you lean into that?
Yeah, absolutely. I mean, the pullback that we've seen, and I think we were all expecting it, that the market was expecting a bit of a pullback. Markets don't go up in straight lines.
Is that a healthy correction we've seen, or just a healthy pullback? How would you characterise it?
A little bit bigger than maybe we would have expected and liked, and there's a few factors for that. Geopolitical risks have been a little bit higher, and the second, of course, is the big interest rate story. Interest rates are definitely proving a little bit stickier, inflation a bit stickier, and interest rates than we might have expected. So the pullback has been a little bit sharper than maybe it might have been, but a pullback is entirely expected, given the levels that we got to at the end of that first quarter. So absolutely, this does feel like a bit of a buy the dip kind of rally rather than the sell the rally kind of market.
Can equity markets rally if central banks keep rates higher for longer? Can they look through that, Helen?
Yeah, I absolutely think that they can. So interest rates are important, but at this level, equities can still perform well. But there are things we continue to need to focus on. The first is those two tail risks. And the tail risks, last time I was here, they felt pretty small. They definitely feel a bit bigger. The tail risk of inflation being sticky and the potential of rate hikes. And secondly, that recessionary concern, although that one is probably the one that has shrunk a little bit. The key thing, and I know you've talked about it already this morning, is these earnings numbers. The earnings numbers do need to come through. And what we're seeing, interestingly, we saw it a bit last week in some of the European chip names, is when there is anything that is conceived as anything like not perfect, even if the earnings look strong, the revenue isn't perfect, the guidance is a little bit more cautious, you are seeing quite a big pullback. And this week, as you've already said, some big names reporting. So for me, it's those earnings numbers that have become almost more important than anything from a macro perspective, which is an interesting market.
How asymmetric is the position we now find ourselves in, though? How hard is it going to be to make upside gains from here, given the fact that the tails are getting bigger? And therefore, is the bigger risk is the asymmetry lies at the downside, and that's where maybe you want to be hedging maybe some of that downside risk as well. And if you are going to be hedging it, how do you do it?
Yeah, no, I do think there is a bit more of an asymmetric risk. Again, if you take the first quarter, I think 7% for the stocks, it was never about multiplying that by 4. It's more like where we are now. So a much more steady market is what I think most of us would predict for the end of the year versus what we saw in that incredible first quarter. How do you hedge it? A little bit of the defensives and the quality defensives. Again, if you look at the names that are doing well already today, these are quality defensive names. And that's a kind of good hedge to play. The other one that's really exciting for me as a CEO responsible for Europe is the European names. This really, really could be an interesting time for these names. The broadening of the market, much more relevant in Europe. The valuation gap, which is now at 40% versus a more traditional 20-25, could be interesting. And if the ECB does cut before the Fed, which is now basically what's being built into consensus, could also give us a bit of a pivot for the small caps.
The argument recently about buying Europe has been the US is so expensive, you want to look elsewhere. If the US becomes less expensive, why do I look elsewhere?
I'm not sure that is the only argument for Europe. The other big argument for Europe is the breadth of the market. It is much more broad in terms of where you find those quality winners. And I think that is going to be a much more interesting play. And, of course, the interest rates. Now, whilst I say that interest rates long-term can stay where they are, there is no doubt that if and when interest rates do cut, that is going to give a boost to that market. So that's another thing. The US dollar, we've talked about the strength in the US dollar, generally not good for equity markets as a whole. But for multinationals in Europe, a strong US dollar isn't a bad thing. So there's a lot to play and a lot to be interested in Europe. I don't think it's just about the valuations, albeit, Guy, the valuations, of course, are one of the factors.
So if we're talking about that broadening out in Europe, do European investors in Europe, need to be concerned about the mini correction you're seeing in the States in terms of it being tech-led? Is there a bigger, more magnified read-through into Europe, or is that minimized when it comes to the kind of the cross-Atlantic trade?
I think there is going to be a read-through. I mean, I think this goes back to this week, some really important earnings numbers coming out, particularly in some of those bigger, really important parts of the Mag 7. If they miss, there is going to be a read across globally. There is no doubt about that. So there is going to be read across, but the read across is much, much smaller in terms of the implications for the European market. You're not going to feel it in some of the industrials names that have done very well, some of the A&D names, aerospace names that have done very well. So the read across is much more muted, but I'm not going to say that there won't be one. Of course there will. And I think we're all very, very focused and hoping that those numbers do well. Yeah. So that's going to be a key focus this year.
Can we talk about these bank stocks as well? We've got 3 big ones on Thursday itself, Deutsche Bank, BNP, and then Barclays as well. Is the story there still buybacks, which I think is what we talked about the last time you were here, or is the story peak net interest income?
So I think it's both of those, but also a third factor, which is the strategy of these banks going forward. I think what's very interesting, particularly in some of those larger banks, the acquisitions they're making, how long those acquisitions are going to be to play out. That's a really interesting story for us. There's been some pullbacks in some of the larger names that we're leaning into. But that is much more specific for particular names. There is some dispersion between different countries, the structure of the different countries and the banks structure in those countries. So I don't think it is any one thing. I think it's a combination of all of those things and selectivity within those banks, which have got the good long-term strategy to play into, which are in markets that are just a little bit less competitive, and the buyback story that we continue to talk about and continues to be really, really important for investors.
What do you do with energy companies in Europe? Is that part of the valuation call? Is that the appeal? And what is the time frame that you want to be getting exposure to some of those energy majors?
So the energy majors are very, very interesting. Obviously, the oil price has had a really good run year to date, a little bit of a pullback, but mainly because, again, it was probably overdue a bit of a pullback. The energy majors in Europe provide a really interesting valuation play in that value part of the market. And I do think you need to buy. And actually, I think it can be a little bit more of a tactical purchase. If you look at the valuation levels, it is a really nice way to balance the portfolio, to your point, Guy, to make it a little bit more barbelled. They are a really interesting place. They don't look expensive. They have very, very good yields, so a different way of returning capital to shareholders. It feels like the risk in those, we all talk about the oil price being in a range. I think, if anything, again, the risk to the oil price is on the upside rather than on the downside. And therefore, it feels like, dare I say it, a relatively safe play to create a little bit of balance within a portfolio. So short-term tactical, I would say, go for it.
If the market feels asymmetric and I'm looking for safety, why am I buying equities at the moment? Am I buying equities? Am I buying equities for that dividend yield? Am I buying equities for income? Am I looking for the more bond-like stocks? Is the way I think about equities beginning to evolve? You talked about at the beginning of the year that was a capital appreciation story. I'm looking at share prices going up. Am I still looking at share prices going up, or am I buying stocks for something else? That return of money in various different forms.
Yeah, I mean, the first reason you're buying stocks is that classic line. It's time in the market versus timing of the market. If we could all get it perfectly right, maybe today would be a day to be a bit more cautious. But the second thing is this move much more into, and of course for me, I'm a little bit biased, into the more selective, active part of the market. Where are you seeing those quality names? Where are you seeing the opportunity in some of those small cap names that will respond well when those interest rates do come and get cut? I think the selectivity is the key.
So you're buying small caps in Europe?
Yeah, absolutely, absolutely. It needs the interest rate selectively, Guy. Yeah. It needs the interest rate cut to be the catalyst. And we did think that would come sooner. So perhaps we went into small caps a little bit earlier than maybe would have been the right thing to do if you had perfect foresight. But some of those small caps are so cheaply valued, and they're valued at still recessionary rates. So if those interest rates cuts, and I think it's a when rather than an if, really interesting valuation opportunities there. So we're seeing a lot more of our portfolios broadening out, both in terms of the sectors and in terms of the cap. So absolutely.
When does the correlation between bonds and stocks turn positive?
Well, this is slightly outside of my area of expertise, but I think when those interest rates do start to move, I think we all kind of feel like we've been in a holding pattern right now. Equities do perform well, as I say, at these level of rates. But we're all kind of waiting. Who will move first and when will they move? Will the Fed go before the US election? Will the ECB move, or are they going to be too concerned about the FX implications if they go too early versus the Fed? So I think we're in a bit of a holding pattern at the moment. When that starts to normalize and we kind of break out of that holding pattern, I would say that's maybe when we get to a more normal correlation. But it's not an area that I have expertise in, so that's one that I'm very happy to hold my hands up and say I may be calling that wrong.
We'll see what happens. Maybe you'll be right.
Yeah, I hope so.
You never know. Helen, nice to see you. Helen George,
Likewise,
CIO EMEA for Fundamental Equities at BlackRock. Thank you very much indeed. Quick look at what's happening with the Core 6 this morning, just to see what the core of the European equity market looks like. A couple of things that are probably worth noting. Ferrari's up, but I think it's gone ex-dividend this morning, which I think probably means that that's a fairly strong performance that we're seeing. Nestle has also gone XD this morning, so just be aware of that. Novo's a little bit soft, ASML fairly flat, but LVMH is where the gains are really coming through. But there are, I think, 13 major XD stocks that you want to watch out for in Europe this morning as you look at your screens. Just bear that in mind. Let's get some of the other individual movers that we're watching. Joe Easton, over to you.
So one area clearly in the green this morning is the airlines. Now this looks due to the oil price declining, as Helen was discussing there, oil coming off a bit, down around 1% at the moment. We're seeing that feed through into the airlines, given the expected decline in fuel prices maybe in the near term. We did have that report from EasyJet last week, really strong bookings, and we'll get more reports out of the sector over the next few weeks. And we're seeing TUI, IAG, Air France, Lufthansa all higher this morning. Then we'll check in on a couple of those deals headlines that we had out this morning. There's a few moving today. Hypnosis up another 9%. The music royalty firm, getting a second bid. This one coming from Blackstone. A rival bid higher than the one agreed last week. And we're also seeing Alstom doing a bit of a deal, offloading a unit. This is the train company's signalling business over in North America. They're selling that. That was reported over the weekend, and it is getting a boost. Another massive mover, though, in the UK, Tyman. This is in the construction space. It's UK mid-caps. They make sealants into the building sector, getting a takeover bid today, up 25% for that one in London. And over in video games, Embracer in Sweden, announcing that it's going to divide itself up into several different businesses, and investors liking that news today. That one's gaining 18% in Stockholm. Lots going on in terms of the deals today. In terms of the home builders, we did get overnight, we got some data out of the UK Rightmove saying that house prices up around 1% in the last month, and that is feeding through into some of the builders today. Berkeley, Taylor Wimpey, Barrett, Persimmon, all of those getting a boost. There is a story on the terminal, however, though, about how it's still a difficult time for first-time buyers, so not all positive on there at the moment, but that is a boost this morning. RWE had a very small move lower following news of New York cancelling some of those offshore wind projects due to a lack of turbines. That one was down 1% at the open, but it's coming back up slightly, down 0.1% at the moment over in Germany. Then we got a couple of ratings changes. We did Next and the UK retailers over in stocks to watch earlier. That one getting a boost, up 2%. Jeffrey says the outlook is improving as wages stay high, energy prices come down, and that benefits disposable income and spending. But another big one is UBS. It's downgraded today over at Exane, BNP Paribas. They downgrade it on capital concerns. You remember a story a few weeks ago about UBS potentially needing 25 billion euros worth of capital, and Exane says they agree with that and say it's not priced into the shares on terms of UBS share price. And that one is down 0.9%. Exane cuts it from outperform to neutral this morning.
Joe Easton from my Exeter team running through some of the stocks on the move for us. Thank you very much indeed. Coming up, it is, of course, a big week for European earnings. We've been talking to Helen Jewell about the implications and what to look for. We're going to get ahead and a bit more of a deep dive in terms of the preview around the European bank results as well. Expected, of course, later in the week. What to scrutinise with those earnings? That's coming up next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They'd made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
This is Bloomberg.
Earnings season is here.
I know that was fast. It feels like it was only yesterday.
First quarter earnings pivotal for the European story.
Bloomberg is first to break the numbers.
Numbers out from L'Oreal.
Ericsson out with some really strong numbers.
ASML earnings are going to be a game changer.
Coming up, more analysis.
With the smartest insights.
I mean, they've blown past expectations.
Bit of a focus on the consumer there.
In terms of net sales, also a beat.
Keep on watching.
Continuing coverage on Bloomberg. Context changes everything.
European equity markets off to a strong start, 20 minutes into the session. Friday feels like a distant memory, doesn't it? As you can see, some decent numbers being posted on the screen right now. It could all change. It's a huge week in terms of the earnings picture, and a big part of that is going to be the banks that are going to report out of Europe. Some of the biggest names are going to be picking up the baton this week. Remember, we saw a mixed set of numbers and a mixed reaction to what we saw on Wall Street. Bloomberg Intelligence is warning that with the sector trading near a 6-year high, the outlook for lenders may be ripe for a little bit of a reset if earnings disappoint. So are earnings going to disappoint? What are we going to be watching out for? Thursday's a big day, but what are the key figures that we're going to be watching out for? Let's try and answer that question. Bloomberg's Tom Metcalf joins us now. Where's your attention going to be this week?
It's Thursday, as you say, right? That is going to be huge. You've got Barclays reporting, BNP Paribas, and also Deutsche Bank. So probably three of the biggest European lenders, certainly the ones that, with the big investment banks. So for me, on Thursday, I'm going to be looking at how those banks stack up against, some of those US banks you mentioned. You saw Goldman, you saw Morgan Stanley do pretty well on the capital markets side. So can Barclays, Deutsche Bank in particular, replicate that? But, it's pretty much end-to-end. We've got retail banks reporting, NatWest, Lloyds coming out of the UK this week as well. So, yeah, it's going to be a busy one.
On the retail banking side of things, what are you going to be scrutinising, Tom, you and the team, with that particular lens on the UK then?
Yeah, I think in the UK, it's all about, a bit further along on the NII story than continental rivals. So for Lloyds and NatWest, it'll really be, for me, are there any big provisions coming through? Is there any sign of distress? We're really not seeing that. That's very, very critical. And also, I'll actually be kind of looking out for any kind of comments on, individual industry things. So we've seen a lot of consolidation or announced consolidation in the UK, and, Lloyds and NatWest not involved, but whether they guide on, are they interested in doing an M&A, or are they sort of happy with their sort of offering? I think for me, those are the top things.
What's the read-through from the States here, especially when you're starting to see monetary policy at least expected to diverge between the ECB and the US? What's the read-through?
Yeah, well, it was a sort of a mixed earnings season over there, right? So for me, the big one on the Goldman Sachs, Morgan Stanley side is that investment banking sort of strength purely a US story, or can, the Barclays and Deutsche Banks do well there? And then it's kind of tough, like JP Morgan disappointed slightly, but then you had Bank of America, Citigroup doing a bit better perhaps on the retail side. So, yeah, it's really on the continental side, on the net interest income story is how much do some of these European banks have left on that cycle? And it's a slightly complex picture. It's not like everyone's kind of going to be coming off it. I think you might see a few, maybe the Nordics doing pretty well still, but then maybe some of the bigger European banks saying, hey, we're seeing the end of this sort of tailwind, as it were.
What are they going to tell us about excess capital? How much they've got of it and how much they're going to be giving back of it?
Well, buybacks and dividends, that's what really boosts the shares, right? So for the last few quarters, we've seen banks like UniCredit really push that story. For me, the big thing is...
Pretty smiling at me. I feel like I've stolen her question here.
Every time Guy says buybacks, I have to remind him that I said this 3 months ago. Continue.
There you go. So, as Critty's been saying for months, no, exactly. It's just how much further can that actually go? So, you know, I think if they can come up with even more programs, that'd be impressive. I think it's unlikely. But, you know, again, it comes back to sort of bank by bank level. Like, you know, you've seen some people be much more conservative than others.
Yeah.
Obviously, the big changes in terms of the expectations around rates last week. Maybe we even start thinking about a hike at some point. What does that mean for deal making? How should we be thinking about the higher rates, higher for longer, in terms of the deal making part of these businesses?
Yeah, it probably doesn't necessarily help. But I mean, I get the sense that, you know, these rates have been high for so long, almost like people have started to adjust. So I don't know if, you know, perhaps when we're talking about a few months and changes, I don't know how much that will change people's strategy. And the thing for me is really interesting is, you know, whether it's actually going to happen or not, picking up a lot of chatter about deals, right? It seems to be top of a lot of people's minds. Yeah. I don't think it's going to be these mega deals, but certainly maybe, you know, intra-market or something like that, there's definitely appetite. And we're seeing it in the UK with, you know, a really interesting deal last week with Coventry and Co-op.
This is kind of going back to the U.S. read-through question, because over and over again you have people saying, all right, well, if there's perhaps not as much kind of the trading momentum isn't boosting those earnings, perhaps the capital markets activity will. Is the exposure to the U.S. then still where the growth in capital markets activity happens for the European banks?
So, yeah, it's very interesting. Obviously, Santander make a bit of a push in that within the sense of it being a global bank. You know, Barclays, the reason its investment bank is so large is because it does have that substantial US presence. I mean, that's really where you want to be if you're looking to get the growth. Yeah. But, yeah, you know, it has been a slow market in Europe, and you know, I do have the sense that, you know, it's got to pick up on some extent. So I wouldn't say it's essential, but for, you know, to compete with, say, the JP Morgans, the Goldmans, you're going to need that.
Can I just come back to the M&A comment you made just a moment ago between the banks? Banking deals don't usually get done in Europe unless there's a massive crisis. Yeah, we've seen that. UBS is obviously an example of that, but there are plenty of others. But there's also this increasing chat of capital markets union becoming a greater reality. Banks usually prepare for kind of critical moments, crises moments, when they think deals could get done. Are you hearing chat that the banks are getting ready for that kind of a moment? And do you put the capital markets union stuff, kind of plug that into it as well? Are we heading for a moment where actually Europe may start to consolidate in a big way?
Well, certainly a lot of the big name executives would love that. And I think I wouldn't couch it as sort of within a crisis. What we're hearing is sort of European executives go, we've got to move beyond big mergers only happening during a crisis like UBS and Credit Suisse. In fact, they're saying, hey, we need to get the regulation in such a way that we can actually push through cross-border mergers for Europe, because it's clearly needed, you know, at least, you know, according to the executives. So I think that's probably what they're pushing for, but the message, as it's always been, is, look, we need to get those capital market reforms in place first. So that's why I'm not very optimistic we will see some kind of huge cross-border deal.
Okay, Tom Metcalf, thank you very much indeed with a fantastic setup in terms of what to look for within the bank earnings story in Europe this week. And of course, later in the week, you don't want to miss our interview with the CFOs of Deutsche Bank and BNP Paribas. So we'll be having those as well in the reaction. Stay with us for more. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisce with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From the world of politics to the world of business, every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
DOJ or other authorities
could face bigger challenges. Britain's election
was going to keep bringing World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley.
I think that's Sean Fain. I think that's the UAW. I think that's the celebration that we saw this weekend in Chattanooga as the VW plant there voted to join the UAW, the United Auto Workers. It's a landmark victory for the union that has been organizing in a long hostile U.S. South. What's next? Obviously, Tesla is on the list. President Joe Biden congratulating employees, calling the vote historic. What does it mean for Volkswagen, I think, is another question that we need to ask. It has got a busy week. It's had to deal with that this weekend. Plus, also, it's got a capital markets day that is going to be taking place in China. China Day this week as well. Let's talk about the significance of the UAW vote, first of all. Ollie Crook joining us from Berlin. Ollie, what does this mean for VW?
Yeah, so there's a lot of onlys here, right, in this story, and this is why it's so significant for VW and for the UAW. This is really the only major assembly plant that Volkswagen has in the United States. As you say, it's in Tennessee. It's got about 4,300 workers. So it's significant because it's also their EV hub for the United States and North America, and this is going to be their profit center going forward. And guess what? Their costs just went up, potentially, with this unionization. It's also the only UAW unionization shop of a foreign auto company, so it's significant for that reason. And it's also the only one to unionize in the South. All of this is part of Sean Fain's movement to try to bring those union back. In terms of what it means for the car companies, I mean, Guy, we talked about this, the sort of gap between the wages between union, non-union workers is about a $5 gap. Overall, that's just for the wages. For benefits, it's about $11 gap. But we were talking about this when there was the big strike for the big three at the end of last year. Pre-strike, Ford was paying about $64 an hour for labor, where the foreign automakers were paying just about $55. Tesla, that's about $45 to $50 an hour. So these are really significant gaps. And after they struck those deals, Guy, they had Ford coming out saying that it's going to add $900 per car and shave about 70 basis points off of margins in an industry where they're really fighting for every single margin, a basis point on the margin right now.
So the impact is real. What is the broader context for VW specifically then, Ollie?
Yeah, so we talk about the unions for Volkswagen. Obviously, this is a company that turns out more cars than almost any other company in the world, but you wouldn't know it by looking at their market cap because investors have really lost some confidence in partially their EV strategy, but also what's going on in China. The good news for Volkswagen is that they're used to dealing with unions. It's a major part of their association here in Germany. They hold a lot of the board seats. But when it comes to the sort of China story and how they're going to regain market share in China, I mean, you look at their numbers last year, they sold just about as many cars in China as they did in Europe. That is not a good omen for their growth market, and that puts the focus in terms of growth on the United States, where again, you've just had a major development in their cost base in the United States. I mean, they only have about 4% of the market share in the United States. That's less than Tesla, so that is their potential growth area, and as we've been discussing, again, that just got a little bit tougher for them.
Ollie, this has been an issue for a lot of European companies. Stellantis, for example, notably saying that it ate into their bottom line. If we see more unionization in the States, which, by the way, the Biden administration is very much campaigning for, what is the read-through?
Yeah, so this is a major push for Sean Fain, the union boss, who probably no one had really heard about on the international stage until a couple months ago when he got that historic deal from the Big Three, about 25% on wages, 30% total for all the union workers in the United States. And when you think about the unions, I mean, the UAW had about 1.5 million workers in it in the 1970s. It's down to less than 400,000. He has said he wants to get that number up by 150,000 workers. He's targeting about 16 companies. So really what we need to watch out for, all of these foreign automakers, whether it's Mercedes, BMW, Toyota, and of course also some of the domestic ones. Tesla is going to be in focus, but in terms of the next shoe to drop, Mercedes, they have a production site, a plant in Tuscaloosa, Alabama, and that is where they're going to have the next vote in the middle of May. So you could see this slowly coming to the fore. And again, as you mentioned, Creedy, this is something that Biden has been supportive, but guess what? Even candidate Trump has made a huge amount of noise about basically erecting trade barriers and trying to keep production in the United States, saying that even if you're producing cars in Mexico, that's not going to be good enough to get them into the United States for free.
And Ollie, to your point, President Trump making a very big bid for the endorsement of Sean Fain, which of course he then lost to President Biden. We thank you so much, Bloomberg's Oliver Crook. They're walking us through the implications of the union votes in the States and what that means, of course, for the European car makers. Let's stick with the story of car makers, though. Elon Musk has postponed a trip to India, blaming pressing issues, at Tesla, which spent the weekend cutting prices for its cars and driver assistance software. This all ahead of earnings due out tomorrow. I'm going to get my words right here. They are due out tomorrow. They're expected to confirm a first revenue decline in, get this, 4 years' time. Let's bring in Craig Trudell, our global autos editor. Craig, how much trouble is Tesla in?
I think the fact that we're seeing such kind of, rash moves by Musk, I think it really speaks to this idea that, oh no, things are not going well here. And we've seen in the past that when his back is up against the wall, things get really sort of hectic really fast. I think back to 2018 when he decided on a whim to tweet that, he had the funding secured to go private. We're maybe not quite to that level yet, but we are sort of approaching that level of chaos just with the amount of change happening, some of it which is really unsettling folks within Tesla. There's really concern about this idea that he's going so far as to put aside plans for a $25,000 car and sort of, put it all on robo-taxis, which he's been talking about for years, but which, Tesla really hasn't made a whole lot of progress with standing up the infrastructure it needs to do that.
Is that a bet the company type move? I listened to one of his a podcast recently. He was on it playing with the soundboard, and he was talking about bet the company type moves. Is this a bet the company type move? And how do I see that if that's the case, kind of versus the earnings that we're about to get?
Yeah, I mean, I honestly think it is in the sense that, if you think about what a company like Waymo or Cruise has done, this is not a cheap endeavor. This is not something that you can sort of, just sort of make little bets here and there. You have to hire a whole lot of people. You have to set up infrastructure to, let's say your car, gets into a position where you need it to move out of the way for some sort of emergency. I don't know that Tesla. I don't know that Tesla has, remote operators or a system to set up, to handle that. We've seen that bedevil companies like Waymo and Cruise that have raised billions and billions of dollars, and even they have had challenges with that. And they're, several years into testing these self-driving cars out on the road.
So you got that, and then you got the earnings coming up. Can I ignore the earnings, therefore? What are the if we're into this kind of stuff? What are the earnings going to really tell me about what's going on in this company?
I think at this point, you almost sort of, it's a given that the earnings are not going to be good, just based on the fact that this company had really, really crummy first quarter deliveries. Nobody was expecting them to be this bad. I think the real concern for investors is, okay, so what's the plan? Are you really going to put this $25,000 car off? Are you really making this, all in on robo-taxi bet? I think, Musk has not been he's been his own worst enemy in terms of not being clear on that and sort of giving people every indication that indeed he's willing to put this $25,000 car aside and really put it all on autonomy.
You talk about the challenge around the deliveries and sales. Which part of the world is it? Because the cost cutting, it just kind of screams desperation at this point, because it's not obviously the first time. They've had multiple price cuts, and they seem to start in China and then roll them out to the US and parts of Europe. Which part of the world is looking most vulnerable to them?
I think China is the most competitive, and you hear Musk say that himself. I think that's where they brought prices down the most. I think it's also, in fairness, where they can afford to do, the steepest price cuts, in the sense that their cost base there is the lowest that it is in the world. And yet, I do think that this is part of why the robo-taxi pivot is so risky. So we've seen these sort of unintended effects of slashing the heck out of your prices. What it's done to a company like Hertz. We saw the CEO essentially lose his job over it. And, that is not just something that affects, big fleet companies. That also affects your customers. What do you feel if your, Model Y that you purchased a year or two ago suddenly is worth, 30% less than you thought it was going to be? You're not a particularly happy camper and perhaps not inclined to buy another Tesla.
How do you disentangle the broader slowdown in the EV market from the idiosyncrasies of Tesla?
It's a great question. I think, the EV market in the U.S., it's almost, entirely been a Tesla story for years now. I think that's changing. I think Tesla is still very much in control of that market. Europe is much more competitive. China is even more competitive. I do think that that's part of what's going on here, too, is that this has been a story about one company, and that is no longer the case. You have BYD really emerging in the last couple of years, and you have the sort of legacy car makers having no choice but to take EVs seriously to try and come up with, some semblance of the valuation that Musk has achieved the last few years.
Well, the valuation is so interesting here, because if I remember in 2018, it took a while for Tesla, given its massive gains, to actually be included in the S&P 500 because of the volatility clause that was built into the way indexes are made. I'm not suggesting in any way that they're going to get booted from the index. That'd be insane. But I'm curious about the read-through into the actual stock price here. Is this still a growing business that's getting more global? And is that how it's being viewed, or are we starting to view it as kind of more fundamentally big tech and more established in that regard?
I think we've seen the Wall Street analysts sort of slowly but surely come around to this idea of, oh no, this growth company is no longer, it's run out of growth. And yeah. I think there's a concern now about, are vehicle sales actually going to drop this year? If they don't have a cheaper car on the way, are they going to drop next year? Sort of where is the bottom? And people are really struggling to get a handle on that, because the new product that they do have is a really difficult to make, expensive pickup truck that is also very polarizing.
I mean, the irony of it all, and we just showed that chart on the air, and guys mentioned as well, that Exxon is now a bigger market cap than Tesla, which, by the way, got booted from the Dow Jones because it was considered kind of, one, lost that much money, but also because it was kind of old oil. Craig Trudell, our global autos editor, walking us through a little bit of everything. We thank you so much. Coming up on the program, a $95 billion aid package with a little bit of a bolt-on piece as well, forcing TikTok's Chinese owner to divest its ownership. On a fast track to becoming law in the States. We're going to bring you the details next. This is Bloomberg.
other thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Morning.
Yeah, and to be clear to viewers who haven't been following it in a granular detail, the House had always been the problem, hadn't it? The Senate was going to pass it. They had their own plan for Ukraine. The President was always going to green light it. So we expect it to get to the President's desk by the end of this week, and those fund flows and that military kit to get to Ukraine. So really, really interesting. And then there's the TikTok and the Iran parts.
The TikTok part's interesting because the timing is as soon as Blinken goes to China, which I believe the Ministry of Foreign Affairs has confirmed this morning, April 24th through 26th. That'll be a fun discourse, I'm sure, as President Biden signs that into law.
I just want to come back to, if you weren't watching at the beginning of the conversation, your view is that maybe the Chinese just go, we're not opening up the algorithm. There is legislation in China that does not permit the algorithm maybe to open up to foreign eyes.
Well, we'll get Alex Webb's take on this as well. But I just have not seen in recent history examples of the current Chinese government concerned about sacrificing one of their companies if it's in the interests of national security. And that's how they'd be looking at it. They do have the laws in place domestically to ensure that you have to get permission if you open up an algorithm that was created in mainland China domestically. If that's what the US are calling for to have that comfort level, I don't see China relaxing on that or giving way on that. Things could change, but that would be my take right now. Let's bring in Alex Webb then, who's got the details on this story around the potential TikTok divestiture then. A bill forcing TikTok's Chinese owner ByteDance to divest its ownership is on a fast track, of course, as Kriti was saying. Alex, what do you take from what we've been hearing out of Washington and how significant this could be for TikTok? Have their efforts to lobby around this failed? What is it looking like now in terms of the future for TikTok in the US?
Yes, it certainly looks that way. We were in a similar situation maybe 5 years ago where it looked under the Trump administration, something might be pushed through. We saw a bunch of big tech companies, names like Oracle and Microsoft, sort of hovering around the prospect of being able to acquire TikTok. from ByteDance, the parent company in China, it really doesn't look good for their ambitions to retain ownership of it. The bill has been, as you say, has passed the House. It looks very likely that it's going to pass the Senate. And, as you said, the president will sign it into law as soon as he can, immediately after that. They then have a year to either divest it, or it'll be banned in the US. Now, they've said they will take all legal recourse to try and prevent this. The question is whether that gives them a stay and actually the year starts again, or whether that year will continue to progress. I think that will partly be down to the interpretation of the relevant judge. So they are certainly on their kind of last legs in terms of trying to prevent this.
So a ban is becoming more likely. Is Meta therefore the winner from this, Alex?
Instagram generally has been the company that has benefited or is competing most keenly with TikTok. A little bit of YouTube as well. Don't forget, YouTube also developed a product that is very similar to TikTok. We also have to see who might acquire it. If it's a sale, if it's an IPO, there are names out there who would like to have a piece of TikTok. Now, access to capital isn't quite as good as it was a good few years ago, 5 years ago, as I said. So maybe there'll be less interest on that basis. But it is, the fastest growing social media app out there. Anybody who maybe doesn't have a great social media business, Microsoft is one of those names, might therefore be interested in trying to get their paws on it.
Alex, talk to us about the secret sauce of TikTok then, which is this algorithm and the scrutiny that's coming under in the US. If it gets divested, if another company comes and buys up TikTok for the US business and they don't have access to that algorithm, is it still really TikTok? I mean, how are we thinking about that part of the story?
Well, it's kind of unclear how the semantics of that would work. It looks as though, previously they discussed you just have to license the algorithm, but you may not necessarily have the ability to look under the hood. Of course, the way that this thing works is you don't go in as you do with so many other apps. If you get Spotify, for instance, it will ask you what music you are interested in, right? TikTok doesn't do that. It just starts serving you things and, actually remarkably quickly manages to determine, to ascertain what the fields are that you're interested in. And interestingly, and this is a little bit different from some of the other more established social media apps, it does regularly surface different types of content into your feed just to see, are they going to nibble on that? Oh, they are, right? So that's a new field they might be interested in. That is a really interesting thing that has actually changed the dynamics of social media considerably, because it doesn't matter to the same extent how many existing followers you have. Somebody can start from scratch today and be getting 1 million views on a video, but then the next video might only get 3,000. So it is a big change in the sort of economics of social media apps. How the licensing agreement might work, that's a detail that I'm yet to see any clarity on.
Bloomberg's Alex Webb, we thank you so much for walking us through that. I think it's a really interesting dynamic when you look at kind of whether or not you even want exposure to this TikTok story, which brings me to a vital question. Do you have a TikTok?
You know the answer to that question.
I had to say, do you even have a Facebook account? Do you even know what YouTube is?
I'm aware of YouTube. YouTube, yes. Facebook,
okay,
it's been around for a while. Let's put it that way.
We're working on.
Guy is smashing through social media barriers without TikTok. He's massive.
You are on TikTok
and going viral as we speak. Now I've avoided TikTok.
Yeah.
I just the amount of attention I have, So maybe I've been pushed by some to get on there.
I feel like you would have a lot of a track record, but the reason I bring it up is because Alex was kind of mentioning this, who the main competitors are to your question, Meta, et cetera. If you actually look at Instagram, which again, Guy does not have, this
is revenge, by the way.
It totally is. I'm taking full advantage. But you can actually get TikTok videos on YouTube or TikTok videos on Instagram as well. So there's kind of this cannibalization anyway, as opposed to directly competing. I can see TikTok videos on my Instagram feed. And I think that's an interesting dynamic in terms of, is there kind of instead of a competitive end, is there a tailwind to it?
Didn't Taylor Swift just put her music back on TikTok?
I knew you would bring it there.
Just to bring it back full circle. I'm not sure Enrique is going to be on there, but we can debate that.
I'm sure he would.
Yeah.
Oh my gosh.
Off air.
So mean.
What goes around comes around. It was Chris' birthday this weekend, but that has now passed. Okay, let's talk about another element of all of this story. As part of this package that we've seen coming out of the House over the last couple of days, there is also an element which includes new sanctions on Iran's oil sector. Paul Wallace joins us now to discuss this. Paul, how effective will this be?
Hi, Guy. Well, if the U.S. implements these sanctions as they're put on paper, then they could be pretty effective in curbing Iran's sort of more than 1 million barrels a day of crude exports. The issue is that the market clearly doesn't think that the White House will do that because it's intent on keeping oil prices down or at least steady. And I think that's one of the reasons why oil is lower today quite heavily. We're seeing Brent close to $85 a barrel and WTI below $82 a barrel. Simply put, traders do not believe that the U.S. is going to do all that much to stop those Iranian barrels coming onto the market. The U.S. President looks at gasoline prices, pump prices in America very, very closely. The last thing he wants with the November election looming is higher prices at the pump. So that's the big issue here. Just how hard will Joe Biden go in terms of enforcing these sanctions?
Why hasn't the US imposed sanctions properly until there's been a lot of reports, haven't there, that basically the US eased back on implementing the sanctions that are already in place to try and ensure that prices didn't get too high on oil. Why have they taken that route? Why haven't they taken more action more quickly? What's been the thinking coming through from DC?
Well, I think it's certainly the perception among most oil traders that the U.S. isn't doing all that much. That's what they've been arguing for a long time. And in their view, it's simply a case that the U.S. is nervous, or at least the White House and the Democrats are nervous about oil prices, pump prices in the U.S. at least, going up too much. The U.S. has always argued that it is enforcing its sanctions properly, and it completely it pushes back against the notion that there's been any sort of deal in secret with the Iranians, that it would go easy on sanctions in return for Iran, easing off what some of its proxies do in the region, and so on and so forth. I think, to be fair to the U.S. government, it's extremely difficult to stop Iranian oil getting onto world markets. I mean, short of sending a big naval flotilla to the Persian Gulf or to the Arabian Sea and physically halting these ships, which would be pretty escalatory and very risky, it's very difficult to do that. Some of these new sanctions seem to allow the U.S. to target buyers more effectively, and those are teapots, as we call them, small refineries in China. So there are a lot of moving parts here.
Bloomberg's Paul Wallace walking us through those sanctions implications. We thank you so much for that insight. And I think what's crucial is that last piece he said as well, is that there's a China component to these Iranian sanctions as well, which I think is, again, why I'm so fascinated with this aid package. Yes, $95 billion is a lot, but it's the national security implications underneath targeting Iran, China, Russia. And we haven't really seen that priced into the market. It's not something people are really paying attention to. I wonder if that changes.
Or is it because the markets realise that these sanctions are ineffective, largely, that history suggests that they've been effective? And China is the buyer when it comes to Iran.
You just
right?
rewire the global economy, don't you? You're seeing it in metals because of Russia. You're seeing it with oil because of Russia. And that story continues. Blinken's going on Friday. I suspect he'll talk tough, but what impact that will actually have.
Does this set the stage, though, for more election risk? Is this something that the markets pay more attention to in 6 months' time, 12 months' time, as opposed to right now?
We're going to keep a very careful eye on the oil price. There's a big meeting taking place in Rotterdam as well. Big conference taking place in Rotterdam today, so you may get some headlines out of that a little bit later on as well. Big week coming up. Let's talk about what comes up next. The chairman of the luxury fashion house Valentino joining.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. U.S. stocks seek a magnificent boost from big tech earnings as investors look for an AI-powered rebound on Wall Street. Now, the U.S. House passes aid packages for Ukraine, the Israel and Taiwan. Volodymyr Zelensky says billions of dollars in new funding could help Kyiv retake the initiative against Russian forces. Plus, Tesla spends the weekend cutting prices as sales slump and its shares slide. The focus turns to the EV maker's crucial earnings report tomorrow. Also ahead, a look at luxury. We'll have an exclusive conversation with the Mahula chief executive and Valentino chairman, Rashid Mohammed Rashid. That's at 9:30 a.m. UK time. Now, first thing is first, let's take a look at the European markets. Net map, we had a pretty volatile and in certain cases pretty difficult week last week. Today, we're seeing a little bit of a rebound. You can see the FTSE gaining 1%, the DAX gaining 0.2%. Again, the focus really has shifted from the Middle East tensions to company earnings and economic data for any insight into the direction of central bank policy. So a couple of things we need to watch out for. Treasuries, there's a number of options, of course, that will come into play. So you can see the U.S. 10-year yield for the moment, 4.6414, euro dollar 106.58. And of course, all of this plays into the divergence between what the Fed does, what the ECB does, and where that leaves the Bank of England. Now let's bring in Allianz chief economist Ludovic Soubran in Paris. Joining us here in the studios, Bloomberg's Justina Lee. So thank you both for joining us. Ludovic, let's start with you. When you look at the big week ahead, a lot of the focus, of course, will be on central banks. Is there anything that you think could now deter the ECB from cutting rates come June 6th?
Not much, I hope. I'm still in the camp of people that think that the ECB won't cut without knowing almost for sure that the Fed will cut this year. So I think one of the issue is really the ECB being in this Schrodinger's cat situation. They cannot really start a loosening cycle without the assurance that the Fed will start later this year, even if it's after the summer and they start before the summer. So for me, that's the one piece of the puzzle that is a bit complicated, but I guess the IMF spring meetings were a time where maybe some central banker chit-chat happened to make sure that this is telegraphed and this is going not too much in an unsynchronized way.
And Ludovic, I know you have a really important, you talk about Italian law driving markets, and this is basically the interplay between geopolitics, especially after the nervousness that we saw last week, and what this means for risk-taking in markets.
Yeah, I'm very surprised by how markets take the current situation between Israel and Iran and the Middle East in general. They seem to be completely unfazed, if you will, by the situation. So I call that Italian law. It's, an eye for an eye, and then everything's go back to normal. I find that very optimistic. I think markets, by definition, equity markets are front-loading good news this past few months. But I find the situation, especially what you see in the geopolitical risk premium in the oil prices, I find the situation to be taken a bit lightly, even the level of escalation that could ensue and what it could mean for the region and more generally for the world, right? So I find that to be I call that Italian law because it's as if markets believe in Italian law when it comes to the Middle East.
What's your take, Justina, on the kind of markets that we could see this week? So again, there's going to be a big driver from the big seven. I know Tesla's maybe a little bit to one side because they disappointed in sales and the stock is down 40% this year. But so we'll get a lot of driving impetus for the S&P from these tech earnings. But then it's all about central bank divergence.
Yeah, exactly. I mean, this week we're going to get data from kind of the Fed's preferred inflation measure at the end of this week, and we're also going to get U.S. output data. And I think kind of this divergence is kind of pretty interesting in that it does seem like there are a lot of factors that seem kind of almost unique to the U.S. at the moment that might even tell you something about kind of the structural dynamics in the U.S. economy. And I think, the question here is, especially with earnings coming up, is that we've kind of had this really strong kind of run up in U.S. stocks anyway. So could it be that even if we do get those earnings numbers that markets might be looking for, that in a way it's already been priced in?
What do you think, Ludovic? I mean, again, when you look at the economy, is there a difference between what you think the economy will do and actually some of the market movements that Justina's talking about?
Well, I do think that the markets are really ahead of themselves, and the earnings season is going to confirm that, especially the U.S. earnings seasons. I find that quite interesting as a disconnect. But of course, if you're listed, it means you're a good company. But I think the SME, the small and medium enterprises, are not doing that good. And you see bankruptcy levels really rising all across the U.S. and Europe. So it's not only a European story. So I find this economy, this big is beautiful type of gradient to be quite interesting. And of course, this will be confirmed again. So I think the economy is really lagging compared to what we see in the markets. Yeah.
So when you look at, Ludovic, I mean, one of the other things that we're really trying to figure out is actually the Bank of England, which is probably the most interesting central bank right now just because of market bets. So if there's an assumption that the Fed, of course, waits and delays, and if there's an assumption that the ECB cuts June the 6th, half the bets for the BOE are they follow the Fed, the other half of no, they'll follow the ECB, only one can be right.
Look, we have the BOE following the ECB actually as of now. So we didn't postpone our BOE rate cuts after we see that the Fed cut will be moved. But for the BOE, just like for the Fed, it's a very politicized move also, because the UK's general election is around the corner. So you want to have the beginning of a loosening cycle so that it doesn't, synchronize too much with your election. That's the same for the Fed. That's why we have a cut in September instead of November that the data would suggest. So right now the Bank of England is cutting in the summer for us. Yeah.
Justina, what's your take on treasuries? Again, there's going to be a lot of auctions, and a lot of market participants are on tenterhooks to see if they go okay.
Yeah, exactly. I mean, this week we're going to get a massive amount of treasuries being auctioned, and especially for kind of like the shorter end of the tenors, 2-year, 5-year, that's going to be a record amount. And I think a lot of people are trying to see, we have seen kind of yields coming up. Are people kind of happy with this level of yields? How strong are demand? And of course, kind of with markets kind of newly pricing in the prospect of like a much later rate cut, I think people are kind of trying to see how those few things kind of intersect.
What's your take on China, Ludovic? I mean, we're going around the world and very fast because there's just so much to talk about. China still seems the big unknown.
I think the numbers last week were quite good. I think people tend to underestimate the fact that China is ready to do whatever it takes to get back in the saddle. And I think they're ready to do a lot. They're extremely concerned about the trade muted situation, and they're concerned, of course, about how depressed the consumer is after the real estate ramification. So I think I'm quite optimistic on China right now. At least I'm in line with markets, which have been also quite optimistic lately on China. But of course it's a very fragile equilibrium, and it will depend on how much fiscal they're ready to do additional to what is already in the pipe, which means an additional. For us, it's we have another rate RRR, the reserve requirement ratio cut, and we have another point of fiscal stimulus, and we have the renminbi that depreciates slightly. That should help, I would say, China get to 4.5% annualized growth by the second quarter.
So do you see actually China importing deflation, or does that stabilize?
That's a big topic. I think China right now, the deflation story is really ingraining the real estate crisis, or the depressed consumer demand. I think they're really trying to fight it, but they're trying to do it without recreating a bubble. And so it takes more time. So for us, we see the inflation story in China stabilizing only in the second half of the year. So this first half is actually quite negative for China still, because the consumer is depressed. I mean, it's really, the investment function is down, and even if there is a form of an external driver to the growth, especially the U.S. economy. I mean, there've been the exports from China to the U.S. have been exploding. So talk about decoupling here. In the end, the domestic story is very muted. Factories are really working on a lower regime, and it's because there is no there's very little demand in the pipeline. So you can see that in the inflation number. So it stabilizes only in the second half, when the Eurozone is actually getting real income effects, and then China can re-export a lot more to the Eurozone.
I mean, that's so interesting. We'll talk about it for another 3 hours. But Justina, when you look at some of the tech stocks, I mean, are we expecting too much from the Magnificent Seven this week?
Yeah, I think one statistic I just read that I thought was really striking is that, I mean, the earnings expectations for the Magnificent Seven are around kind of 38% year on year. And that's what people are expecting for the first quarter. But if you look at the S&P 500, excluding these 7 stocks, it's actually down 4%. And I think that just goes on to tell you that, when we talk about the S&P 500 these days, a lot of the time we're talking about the Magnificent Seven. And so a lot of this rally year to date really has been driven by the extraordinary story in these 7 stocks. And so it's not just about, I mean, we talk about U.S. economic resilience, but it's also about kind of these structural trends in AI and so on. And that really is kind of, I mean, to kind of our guest point, I mean, it's just showing you the divergence between small caps and these 7 stocks.
Justina, thank you so much. As always, Justina Lee there from Bloomberg, and we'll be back with the Allianz chief economist, Ludovic Subran. We'll have plenty more, of course, markets and treasuries. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth, and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They'd made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg, context changes everything.
Welcome back, everyone. Let's return to Allianz Chief Economist Ludovic Soubrand in Paris. Ludo, as always, really great to have you on the program. We talked a little bit about China. We talk about the divergence between the ECB and the Fed. I mean, how much of your time are you spending on India, which is, I guess, the next frontier for possible investments?
Look, India is a big country for us at Allianz. We are one of the largest insurers. We work with Bajaj, which is a large Indian, conglomerate, company. So we're very happy. I would say we wrote a report about India. The main positive stuff, and you've seen the elections, is the continuity on the policy reform momentum. It's crazy. It's fascinating for a middle power to be so much on track with unleashing the economic engines. India used to be very protectionistic. Very protectionist. They used to have, very obscure and opaque, insolvency law. The demonetization shock was a big topic, a big drag on growth and so forth. And now they're really changing. And so for us, it's very positive. I think on the longer term, my concern is how do you open up the economy even more without creating financial liberalization type of crisis? How do you handle the climate change topic? Because parts of India are really under duress for future climate hazard. And third, how do you tap into the savings? How do you make sure the Indian savings are put to good use, especially financing infrastructure, financing social infrastructure, education, health, and so forth. So for us at Allianz, it's really a great country to be in, to invest, and to work on. And I'm quite optimistic on India. 6% growth per annum. Inflation to be more or less under control. The big question is the transformation to continue with the big agenda of a 1 billion plus economy.
Yeah, and I think if the transformation continues, you expect it also to be the third largest globally by 2030. Ludovic, thank you. As always, too short time, so we'll have to get you back on. Allianz Chief Economist Ludovic Soubrand for us in Paris. Coming up, U.S. aid passes the House. Ukraine's President Volodymyr Zelensky says billions of dollars in new funding could help Kyiv retake the initiative against Russian forces. That story's next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome back, everyone. So the U.S. Senate is expected to pass $95 billion in fresh aid for Ukraine, Israel, and Taiwan this week. This is after the end of a 6-month of political deadlock in the House. Now, senators plan to vote on the package this Tuesday. Now, I'm joined by Bronwyn Maddox, Director and Chief Executive of Chatham House. Bronwyn, as always, thank you so much for joining us. If the aid comes through, how much of a material difference does this do to Ukraine?
A lot. Some of the damage in reputation and confidence has been done already. The US has cast doubt on whether it is a reliable ally who is going to keep on supporting Ukraine for this. But the actual aid coming through, the demonstration that there were a lot of votes in Congress as well, and the packages of military support that the Pentagon is said to have ready already, that is going to make a big, big difference, because this was a year when Ukraine could easily have lost this war. And it does, as President Zelensky says, give Ukraine a really good chance of holding on to its position in this fight, of not being driven out.
Does it depend a lot on how quickly some of the aid and some of the money can actually get to the front line? Is time now critical?
Time is critical, but the promise of the aid, the assurance that it is coming, is worth a lot, because it means that Ukraine doesn't have to conserve its munitions as much as it has been doing. It's really been very, very short of all kinds of missiles and ammunition.
There was a lot of concern last week, of course, that Iran will retaliate after the strikes from Israel. Do you think we're in a safer zone right now?
I think we are. And if there is any bit of confidence we can look to in this extremely dangerous situation, it is that Iran does not seem to want a wider war. It said all kinds of belligerent things about being prepared for that wider war, if forced on it, so to speak. But it has done what it can to save face, and then signaled repeatedly that it doesn't want an escalation. Don't get me wrong, it's causing all kinds of trouble in the region, and deliberately so. And we're hearing reports that it's moving into Sudan, so threatening access to the Red Sea. So all kinds of trouble, but it does not seem to want that wider war. And I hope we can now look at some kind of de-escalation of this.
What's China's role in this, if any? I know there are a number of U.S. officials, of course, traveling to China this week. Can they play? They played a big role with Russia and Ukraine. Are they also playing a role in the Middle East?
They're cautiously looking at the support and the working relationships they have in the region, one of which is with Iran, but they're also close to countries in the Gulf. They, as ever, I think, would like to be on the winning side. They don't want an active conflict that gets out of hand, but very much would like those they have associations with to come out on the right side. That's been very much their stance over Russia and Ukraine as well.
How are you expecting the Middle East to develop from now? We know that there were calls, of course, from the U.S. to the Prime Minister of Israel, Benjamin Netanyahu, to temper his response. Is anyone in the Israeli government listening?
I'm sure they're listening. Whether they intend to change what they're doing by a millimeter, I'm not sure. But the US, while being increasingly strong in words and in saying, for example, it won't support a particular IDF, Israel Defense Force unit that's been operating in the West Bank, that's been accused of a lot of aggression against Palestinians, some things like that. It hasn't taken the big steps like cutting off support for Israel. Indeed, it's as we've just been discussing, has affirmed more of that through Congress. So I think that, this is a complex picture. The US is the only country really that can talk to Israel in that way, but lots of other countries are usefully playing a part, particularly to me, Saudi Arabia. And China, of course, brokered this deal between Saudi Arabia and Iran in the past couple of years, and that has had more solidity than I expected at the time. And I think Saudi Arabia is really key to this, wanting stability in the region, wanting, if it can, normalization of relations with Israel, wanting all kinds of deals with the US, but wanting in return for that assurances for the Palestinians of a kind that Israel may, and this Israeli government may be in no mood to make.
The attacks on October 7th happened just before actually normalization between Saudi Arabia and Israel. Will that be back on the cards at some point?
Possibly, in the sense that one party to that normalization, Saudi Arabia, appears interested if it can get the terms it wants. But those terms are now very different from before October the 7th and before what has happened in Gaza, and they include a lot of assurances about something approaching a state for the Palestinians. So we are, in all kinds of countries, including the UK, including much of the Gulf, are talking about a two-state solution, perhaps being revived as part of this awful set of events over the past 6 months. But the trouble is that two of the parties that seem least interested in a two-state solution are this Israeli government and big blocks of the Palestinians themselves.
Bronwyn, I've been told that actually the next 6 months are extremely difficult and could be extremely crucial because you'll have a lot of countries around the world trying to test the U.S. ahead of the election. Do you agree with that theory?
Yes. This year, the American presidential and congressional elections just hang over this year like nothing I can really remember. I'm recently back from Japan, where the phrase, what if Trump, was inserted in sometimes jokingly, sometimes not, into almost every conversation. But for a lot of countries, this really affects their calculations about how to position themselves and what they might expect from the US. You know, the big question is, how is the US going to position itself in the world, and what will it do for its allies and those it opposes? But many have come around, particularly in Europe, to taking the point that they do need to do more for their own defense.
Bronwyn, thank you so much, as always, for your wonderful insight. Bronwyn Maddox, their Director and Chief Executive of Chatham House. Coming up, we're also joined by Mahula Chief Executive and Valentino Chairman Rashid Mohammed Rashid to discuss his outlook as European luxury sector faces a significant first quarter slowdown. That's next, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases, or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
So U.S. stocks seek a magnificent boost from big tech earnings as investors look for an AI-powered rebound on Wall Street. The U.S. House passes aid packages for Ukraine, Israel, and Taiwan. Volodymyr Zelensky says billions of dollars in new funding could help Kyiv retake the initiative against Russian forces. Plus, Tesla spends the weekend cutting prices as sales slump and its shares slide. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So global luxury sales could exceed 400 billion euros in 2025, boosted by a fuller recovery of tourism. That's the view of Bloomberg Intelligence. Now, the estimate comes despite the sector in Europe facing a significant slowdown in the first quarter on lower demand from China. Well, that caused Kering shares to tumble last month after warning of a steep drop in sales at its Gucci brand. Now, Kering bought a 30% stake in Valentino last year to try and strengthen its portfolio, and in March, Valentino also named the former Gucci creative director Alessandro Michele as its new top designer. So for a look at how the Kering-Valentino partnership is progressing and the outlook for the sector, I'm delighted to be joined exclusively by Valentino's chairman, Rashid Mohammed Rashid. He's also, of course, the chief executive officer of Qatar's Mahula, the investment fund that owns Valentino, and amongst others, the French fashion house Balmain. So, Mr. Rashid, thank you so much for joining us. I mean, it's exciting times, it's difficult times for the luxury sector, but they also started at such a high. How do you see demand developing right now?
Well, the last 3 years have been really exceptional for luxury products. Post the pandemic, there have been a very significant surge. I mean, the average was 7% when usually the luxury market grows around 3-4%. We have seen 3 consecutive years of 7%. I think since second half last year, we have definitely seen a slowdown, not only in Europe, but also in the US, and there was always a question mark about how fast China will recover. This year started with an expectation that the luxury markets will grow between 2 to 4%. My personal feeling, it will be much less than that. Probably it will be flat. The reality is that Europe, US is still very flat at the moment, and China is still weak. And we have already seen some companies coming with some results. And it is very clear that it is quite a challenging environment in 2024.
So what makes an exceptional brand? You're relaunching Valentino with the former Gucci creative director, Alessandro Michele. Is he going to focus on certain pieces? What do you think will sell in this dampened environment?
Well, Valentino had an amazing performance in the last 10 years. And Pier Paolo have been an amazing designer. And we have done fantastic with the brand. I mean, we acquired the brand and it was less than 250 million. Today is 1.4 billion. And not only the size, but also the reputation, the attractiveness, the luxury positioning of Valentino have been exceptional. It is true that we have a change in designer today because we believe that there will be a new chapter in Valentino. And we believe that Valentino as a brand is so rich in terms of its archive, in terms of its history, that there is so many dimensions and so many presentations of Valentino. And we are hoping our new designer, Alessandro Michele, who's an exceptional designer, will be capable of presenting something different from a Valentino point of view. We know that in the last few years, there have been quite luxury prevailing.
Yeah.
My guess, like many others in the fashion, this is going to be over. So I think people, as usual in fashion, they get bored. So there is a cycle, and I think fashion and colors and design and creativity is going to come back with force. And we are getting ready for that, yeah.
And where are you expecting a pickup in luxury actually to start from? Is it the U.S. consumer that's still all-powerful for companies such as yourself?
Well, we have seen a significant shift in spending. That's explained the slowdown that we have seen in the last 9 months. from goods to experience. So we see travelers are spending more on hospitality, on experience, on restaurants, on different aspects of entertainment. But again, like everything else, this is cyclical. So we believe that U.S. is going to continue to be influential. For us in Valentino, U.S. is a very, very significant market. Europe have always been the base of Valentino, but really the prospect for us, especially with our new design and new approach now, is how to start really much bigger business in China. But China, as we know, I mean, there is a question mark about how fast China is recovering, and the signs are very clear that maybe in the second half of this year we are going to see a recovery there. Yeah.
How's the partnership with Kering going?
Well, it has been a very, very positive partnership. I mean, they have 30% of the company. We have a strategic, really, alliance in that sense. The company has a very clear plan for what to do in the next few years, so that is not going to change. And I think, you know, the attractiveness of the plan of the company, the vision of the company, the brand, have been really the reason why this deal have happened, yeah.
If they're, I mean, they're concerned, of course, they're so reliant on Gucci. If Gucci sales are down, do you think you can even foster more that partnership between?
Well, I think Kering is an amazing company, and they have done fantastic. If you look at what they have done in the last 10 years, 15 years, it's an exceptional performance. And even a brand like Gucci that people are questioning, you know, how fast it will recover today, let's not forget that this is a brand that was only 2-3 billion less than 10 years ago. Today it's, you know, it's almost double digit, yeah. So I have great confidence, you know, in the capability and the management of Kering, that they will be able really to put all these brands on the right track to continue an amazing growth there, yeah.
I know, I think last time we spoke, I mean, you have Balmain, there were other companies that you were trying to relaunch that.
It's true.
Are you looking at anything else to buy? Do you think the portfolio will get bigger?
Sure. I mean, we know that there is a big scarcity in luxury, and luxury is about amazing brands who existed for a long time, and you cannot just create a luxury brand all of a sudden or from nothing. So there is a bit of history, there is a bit of legacy, there is a bit of archives in it. Balmain is an amazing brand that we have acquired almost 6 years ago. It have tripled in size, and Balmain is very much a representation of the French luxury houses. And we see that there is a huge potential for Balmain to continue to grow. It's very much depending on the American market as well as the European market. We are not really big in Asia at the moment, but this is really an early stage of the development of our brand. Apart from that, you know, I'm always looking for supporting new brands and smaller brands. And this is something that I find a lot of joy in supporting, you know, new designers and creative ideas coming out, yeah.
Yeah. How much are you sensitive to pricing? There has been definitely a move up to price more for the ultra high net worth individual. Do you think that will continue for your goods, but also in general for the luxury industry?
Well, it's a reality that post-pandemic, there have been a very significant increase of price. I mean, we're still living in an inflation situation. I mean, I know that everybody is concerned about how inflation is impacting economy and how sticky it is, and we are seeing some stickiness there. But I would say that the level of inflation and increase of prices have been much higher in luxury and exclusive products. And we can see it even in hospitality, even in restaurants, even anything that is luxury and exclusive, almost double in price in the last few years. And I think that is something that we have to iron out in the next few years. I think there is a bit of a challenge for luxury products in terms of price positioning at the moment. Some brands doing better than others, and that explains, you know, the disparity between the performance in different brands. But you are right. I mean, pricing is one of the main issues now in luxury. Yeah.
I mean, there's a lot of talk about what happens if we have Donald Trump in the White House with extra tariffs. I don't know whether there's been any chatter of these tariffs also touching luxury goods, but is there anything that actually some of, you know, these high-end luxuries companies can do to try and mitigate that?
Well, we always worry when, you know, we have a scenario of Donald Trump coming back. We don't know really how the impact is going to be in different places. But the reality, of course, the American economy is doing well, and I assume it will continue to do well. And that is very important, really, for the health of the global economy. I think the same goes to China. We want to see China also recovering and doing well. It's very, very important that China, because we should not underestimate that China, from a growth contribution point of view, have been a significant, not just to luxury, but to the global economy. So China slowing down is not also good news for the global economy. So Europe, of course, remains there, and there is a big question about Europe, how they will pull it all together, which is something that we hope that they can do it in a positive way. But you're right. I mean, at the end of the day, the level of growth that we will see globally will impact the luxury. But also the reality of luxury today is that the middle class in many economies is growing significantly. So we have the China story in the past. Now we have the India story. We have to look at what happened. Many Asian countries are continuing to develop in a very significant, positive way. So in addition to the traditional America, Europe, Japan, we are seeing a lot of new companies and markets coming up, even in Africa. Yeah.
You seem pretty excited about working with Alessandro Michele. What are you most looking forward to? What do you think he'll bring to the brand?
Well, I'm very excited to work with Valentino as a brand. That's starting with, because it's an amazing brand. And I believe that Alessandro, following an amazing, performance of Pierpaolo, will be able really to bring a new chapter for Valentino with a completely new dimension. As I said, based on this very rich archive that Mr. Valentino Garavani have created. It's an amazing archive. And if you look at it, you will not believe how much is the diversity there. And I think Alessandro will probably bring another angle from that archive that we have not seen for some time now in a very, very attractive way.
Mr. Rashid, thank you so much for joining us today. That was Rashid Mohammed Rashid, the chairman of Valentino and Balmain and chief executive of Mayhoola. Coming up, a bill forcing TikTok's Chinese owner to divest its ownership is on a fast track to becoming law in the U.S. We have all of the details next, and this is Bloomberg.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
A bill forcing TikTok's Chinese owner ByteDance to divest its ownership is on a fast track to becoming law in the United States. Now, the legislation was included in the aid package passed by the House over the weekend. I'm now joined by Bloomberg's Alex Webb. So, Alex, hi. Where do we go from here?
Well, we have actually, if this
does get passed next week, the president had said he will sign it into law very quickly. They then, in theory, have a year to either sell the business, or divest the business, or it will be banned. Now, TikTok has said it plans to use all legal resource to try and prevent this from happening. There are some legal experts out there who say that on basis of free speech laws, they actually have quite a good chance of defending themselves against it. It's interesting to see that what's happening on the other side. In China, just last week, we heard that China has stopped Apple from being able to, from listing WhatsApp and Signal, other messaging apps in China. Of course, Facebook is not available in China, nor are plenty of other Western social media platforms. Chinese state officials have also been talking about the infringement on free speech. So there is a certain amount of irony in there. So they have a year from now, but there is going to be a big legal fight coming up.
Alex, thank you so much. Alex Webb there of the very latest on ByteDance. Now, with Beijing already becoming a top target in the U.S. election campaign, President Xi's government is also resisting any move that could backfire on the world's second largest economy. Let's bring in Bloomberg's Rebecca Chun-Wilkins from Hong Kong. Rebecca, thank you for joining. So Beijing's response to the latest U.S. measures have been more restrained. How much of a tightrope are they walking here?
Yeah, I think that's absolutely right. There is a careful balance here that President Xi Jinping is trying to strike. On the one hand, of course, is obliged to respond to this sort of increasing momentum, introducing curbs, not just from the US, but also more of these investigations and probes into subsidies coming from the EU too. So that's a challenge that they must respond to. But on the other hand, they are relying very much on the US audience to be buying up some of its goods. China has increasingly relied on exports to try and make up some of that shortfall from the property crisis, and it's a big part of the story when it comes to China returning to growth. So we have seen these much more moderate responses perhaps than we may have seen in the past, and really it's in line from right back in November in APEC when Biden made that dictator comment. Beijing was relatively muted. So if we look at the response to the steel tariffs that the Biden administration is proposing, the sort of tit-for-tat measure here China is offering on propionic acid really just targets a very small corner of the market. And like, equally, when we saw Premier Li Qiang, we saw President Xi Jinping engaging quite robustly and concretely pushing back, but not with this sort of fire rhetoric, but quite reasonable pushback against some of the criticisms of overcapacity, of unfair treatment of foreign firms. So quite pronounced, deep and continued engagement from Beijing's side.
Rebecca, thank you so much. As always, Bloomberg's Rebecca Chun-Wilkins. Now, coming up, the pressures are mounting for Elon Musk at Tesla as he triggers a new round in the bruising price war for EVs in China. We'll have plenty more on that story next, and this is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised.
And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome back, everyone. Now, Elon Musk has postponed a trip to India, blaming pressing issues at Tesla, which spent the weekend cutting prices for its cars and driver assistance software. Now, this ahead of earnings due out tomorrow that are expected to confirm a first revenue decline in 4 years. Well, joining us now is Craig Trudell, our global autos editor. Craig, also the one piece that everyone must read, one of many, but the one piece is actually our big take on Tesla. It's a stellar piece. It's a great read. It's not too long. I'll push it out on social media. What did we learn in actually trying to piece this together?
I think it basically reinforces what everybody's worst fears have been, which is that, yes, for the time being, the $25,000 car that everybody was counting on sort of reinvigorating growth for this company has been set aside for this really sort of long odds effort on Musk's part to go for robo-taxis. The concern that everybody has is this guy's been going for robo-taxis for, going on 8 years now, and this is really, really difficult to pull off. Just ask Google, ask General Motors, and it's not a knock against Tesla in the sense that they have really impressive driver assistance technology, but robo-taxi is another leap altogether.
But Craig, so if he gets robo-taxis right, is he a clear winner, full stop? And can he get back on track, or is it just too risky?
I think it's a really difficult question to answer in the sense that nobody has done it, right? We don't know how this is going to work if and when it does work. Yeah. And everybody's, sort of drawn up these models about how profitable robo-taxis could be theoretically, but we just haven't seen it. And so there's a question of, what's the sort of goal at the end of the rainbow, but also, can you get there in the first place?
And I think the share price is down some 40% since the start of the year. It's part of the Magnificent Seven, and there's questions on whether it should be because it's not performing as well as the others. Is there anything that he can at least do to stop the share price falling?
I think, he may be able to sort of spin this as, the $25,000 car is deprioritized, but it's not dead, and maybe that will reassure people. But I also think that he's, by all accounts and all sort of signals he's sent, in the wake of reports about this, is that, he really is convinced that this is the way to go, despite the fact that per today's big take, even internally, he's getting pushback from that. And so, I don't necessarily see a clear path to him, coming on the call tomorrow and saying, you know what, I've changed my mind. I'm going to do the $25,000 car after all. That to me feels like it's the sort of thing that the market needs to hear, and I think the likelihood of that is pretty low.
Is there anyone he listens to? Not that we know. I mean, but this is a fair question, right?
I think it is, yeah. I mean, I do sort of wonder whether or not internally, anybody can get through to him. We were able to see from the Walter Isaacson book that they were in this predicament 2 years ago, and he absolutely is someone who's very sort of hard-headed, strong in his beliefs. Says that he likes negative feedback, and yet we don't necessarily see that come through.
So interesting. Craig, thanks so much. Craig Trudell, there are Global's autos editor, and I would urge everyone to go and read our big take today. Now, Europe's biggest banks were also picking up the baton this week after mixed results from Wall Street peers. Now, Bloomberg Intelligence warns that with the sector trading near a 6-year high, the outlook for lenders may be ripe for a reset if earnings disappoint. Well, for more on the earnings, Bloomberg's Chloe Milley joins us now. So, Chloe, thank you so much for joining us. What are some of the main themes that we're looking out for this week?
Well, as with the last couple of quarters and probably for the next few, the main theme really is going to be a slowdown in net interest income. That's probably going to affect most, if not all, of the lenders reporting this week. And that is despite the fact that expectations for interest rate cuts have been pared back a little bit. There should still be sluggish net interest income trends. That's kind of across the board. And then if we look at specific banks reporting this week, we've also got Deutsche Bank, BNP and Barclays. And for them, another focus will be the performance of the investment bank. There's an area of banking that in general has seen some cuts, some reorganization. So any indication that the activity is picking up a little bit would be welcome.
So what are the main challenges that some of these banks are facing?
Well, related to this idea of net interest income slowing down is the idea of cost control. So the metric called operating jaws, the difference between revenue growth and cost growth, that is likely to turn negative for quite a lot of banks this year. So that will be a really key metric going forward. We also have loan loss provisions, so that is not major for first quarter, but going forward in 2024, we are likely to see a gradual increase. And then, as you mentioned, the stocks are trading quite high, so if there are some disappointments, then that might indicate a reset and some downgrades.
Chloe, thanks so much. It's going to be a very interesting week, especially on the trading front. We'll see who gets it right and who doesn't. Bloomberg's Chloe Milley there with the very latest on banks. Now, for some of the other stories making news, and Bloomberg has also learned that BNP Paribas has hired close to 30 people to launch a new securities operation in China. Now, after receiving regulatory approval, the French bank will build out its brokerage, research, and asset management units. Now, this comes as the lender opts out of investment banking amid a deal slump. The UK Prime Minister Rishi Sunak is pushing to pass a law declaring Rwanda a safe country for the deportation of asylum seekers. Now, the bill in the House of Commons today seeks to circumvent a Supreme Court ruling from last year. This comes as Sunak makes a 48-hour Europe trip to defend his record on defense and regain momentum 10 days ahead of key set for local elections. Now, Olaf Scholz says he's optimistic on his country's economic prospects. Speaking at a major trade fair in Hanover, the German chancellor highlighted record employment and slowing inflation thanks to falling energy costs. Now, the potential economic turnaround so far has not helped the electoral prospects of his Social Democrat Party. So we'll have plenty more, of course, on some of these stories. We'll look for earnings. We're also looking for what market traders are preparing for. So not only earnings, but a lot of the futures, of course, focused on big tech. The other thing we're watching out for is further Treasury auctions. Bloomberg Brief is ahead, and this is Bloomberg.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Good morning from our world headquarters in New York. I'm Manus Granny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The U.S. House approves $95 billion in aid for Ukraine, Israel, and Taiwan, ending a 6-month political impasse. Investors look for an AI-powered rebound on Wall Street with big tech results on deck. And Tesla spends the weekend cutting prices ahead of a crucial earnings report tomorrow.
Good morning. You have a moment of reprieve in the S&P futures. $18 trillion worth of market cap will report this week. 40% of the S&P in terms of market cap. We've just broken 6 days of a drop, 4.5%. NVIDIA, love the line from Goldman Sachs. NVIDIA is the most important stock on earth. The stock dropped by 10% on Friday. It has a small reprieve this morning, up 1.6%. Yields are up by 3 basis points. Again, corporate bond issuance will take center stage along with sovereigns. $183 billion worth of twos, fives, and sevens will come. We're up a little bit this morning. Bitcoin 66,000 at the moment. The halving has happened. The event has happened. Daily production will drop, Danny, to 450,000. JP Morgan and Deutsche Bank say it's all in the price. 66,000 and counting. We've a monster week of reporting to get through. Danny, good morning.
Good morning. A monster week of reporting. We also have PCE on Friday. All of it, Manus, the strength of which might go to continue to support the dollar. This has been the thing that has been on the mind of nearly every emerging market banker, and even the ECB Lagarde said last week that they were paying attention to FX moves. It's made even more stark the IMF upgrading U.S. growth by a staggering 0.9 percentage points.
And it is that growth differential that ultimately will perhaps give the dollar haven, along with rates and to a certain extent railroad. JP Morgan have no doubt this morning, strong dollar is not a U.S. problem. Intervention is unlikely, and yet that is essentially what Janet Yellen, in theory, wrote down in terms of that release last week for South Korea, along with Japan. But let's talk about what our next guest thinks. It is Jane Foley, and she writes this. The current dollar strength is built around the expectation that the Fed rates will stay high for longer, boosted by safe haven demand, stemming from fears of an escalation in the Middle East crisis. So, Jane Foley is standing by for us. Jane, good morning. Good to see you. Look, the dollar really has trounced everything else since the start of the year. It's up 4%. There is nobody who has survived the drive-by. Now, if we are in a higher for longer narrative, what does that do to the enduring strength of the dollar?
Well, I mean, we've seen that. I mean, perhaps this morning we have seen a little bit of the de-escalation of the Middle East, so perhaps a little bit of reprieve
this morning, but the big picture is, as you point out, all to do with dollar strength. Now, I think we know the story with the yen. I think we're familiar with the story of China, Korea, that statement that we had last week from Korea, Japan, and the US, really clarifying that I think the officials of both South Korea and Japan, want to have the US perhaps a little bit on the side if they were to intervene. But of course, everybody says, well, intervention is only going to be really successful in turning a currency pair if the fundamentals turn. And so therefore, if they intervene, it could be a costly mistake until those fundamentals turn. And it could be another few months, maybe September, until the Fed cuts interest rates. So some of those central banks are really going to have to, bide their time, try and make the most of verbal intervention, perhaps for the next few months until those fundamentals start to alter.
Well, verbal intervention only works so far, Jane, especially for emerging markets that are really struggling with a stronger dollar. We're by no means at crisis levels yet, but at what point does it become that?
Well, again, I mean, I think it's very difficult to actually name a level. I mean, we can look at 155 for dollar yen. Yes, that's going to be sensitive, but it is going to be difficult to name a level. It's all related to the pace. It's all related to how the fundamentals are working through at that particular point in time. And we do have a Bank of Japan policy meeting this week. There is speculation out there that the Bank of Japan could be hiking interest rates again in October, maybe twice this year. And I think as long as we've got some of that speculation ticking over, it's going to be useful to perhaps prevent the yen from slipping too much further. And we need to keep an eye on those Japanese fundamentals too. I mean, clearly, I think the dollar and the dollar fundamentals are perhaps the stronger ones here, but the yen fundamentals are important too. We did have a survey out just a few days ago suggesting that the consumers in Japan are a little bit more tolerant of price hikes and perhaps elsewhere. That's good news for the Bank of Japan. But what they want to see is real incomes turning positive. That could happen, should happen in the next few months, and that would give a big boost to Bank of Japan rate hike expectations.
So, Jane, then the narrative with yen and perhaps the crosses against yen is that further yen depreciation will only be stopped or can only be stopped in its tracks by a couple of hikes. Is that enough to put a cap, as it were, on the dollar or a floor? I mean, if we inverted, is that what's going to put a floor on the yen on the crosses to one, possibly two more hikes, rather than some kind of unilateral intervention? Because unilateral intervention in of itself is rarely successful.
Absolutely. Again, it's only really successful when you know that the fundamentals have turned. And to be honest, it's often only obvious that the fundamentals have turned in hindsight. Yeah. So, and I think this is really part of why the Ministry of Finance hasn't intervened just yet, because of the fundamental picture. So, the Bank of Japan policy meetings are key, but I think they do have to wait until maybe August or so, when the market really is getting quite excited about the possibility of a September interest rate move from the Federal Reserve. At that point of time, I think life is going to be a lot easier for the likes of the Japanese authorities, the Korean authorities, the Indian authorities, various others in Asia too.
But if we don't get that, Jane, at the same time, the yen is trading at its weakest in 30 years versus the renminbi, versus China's currency. Surely that's an elastic that can only stretch so far.
Well, there are some upsides to the weaker currency. For instance, look at the tourism figures into Japan now. That they're really, really strong. And that, of course, is an export industry because of the weaker yen. Now, we did have commentary from one of the Japanese officials the other day saying that there's too much in terms of the bias of the good and the bad from yen weakness. It's sort of switched. There's too much bad coming through from that yen weakness. So they do want to stop it. They've been relatively successful with their verbal intervention, but it is a really testing time for them. But we've got to remember, in the list of the weakest performing currencies this year, it's not just the Asian currencies. We've had a number of G10 currencies in that list too, like the Aussie and the New Zealand dollar, the Swiss franc, the Swedish krona. They're all in that list too. So those, however, perhaps not at quite as sensitive levels relative to the dollar. But even so, that there is this broad-based theme of the dollar really pushing hard against perhaps the will of some of the monetary authorities.
Jane, we talk about divergence, and it was a big theme last week, the rates divergence between Powell and Williams. Williams sort of trying to convince the market, look, we're not even, he was answering a specific question in that, our base case is not to raise rates. But the market has latched a hold of this differential, higher for longer in the US relative to Europe. But I'm drawn to your notation of the fiscal situation in France, along with perhaps the overly optimistic view on the fiscal and deficit situations for Italy and France, as two additional flesh wounds to the divergence story. So therefore, is it only a period of time before parity is hit, with three different arrows piercing the euro at the same time?
I do think the risks of parity have certainly increased. I mean, our long-term forecast for a while now has been 105, and, we're with that, but we've always had sympathy for the parity view. But, one interesting part of this is that for Europe, it's quite possible that a weaker euro will actually be welcome. Now, the reason I say that is because we've got the ECB obviously switching its focus away from inflation towards growth. I mean, that's because, it is signalling that it will be cutting interest rates in June. So we've got this pivot going on. Now, that assumes that the vast majority of the inflationary battle potentially has been won. Now, of course, there's ifs and there's buts. What happens if oil prices were to rise further? What happens if there's an escalation in the Middle East, for instance? But if we assume that the battle to contain inflation is mainly won, if we assume that the labour market will be loosening, that there's been an awful lot of hoarding in labour in Europe, that's got to come to an end. And therefore, if the focus is going to be on growth, particularly if you're in a country like Germany, I would imagine that a period of a weak euro could actually be welcomed, given the hit to the manufacturing in Germany in particular, and the impact of the last few years of the energy crisis. So I think we got to a position there, whereas as long as we had relative stability, that I think euro-dollar could remain fairly weak, Jane, for quite a long period.
Even if there is a spike in oil prices, Villeroy was speaking over the weekend saying that they would still cut, that a June cut is still okay unless it was something extremely out of the ordinary. Do you buy that higher oil would still allow them to cut in the summer?
Well, I suppose it depends, how much and how fast. But I think, yes, I think if oil were to rise further, I think what we're probably questioning is how much further will the ECB go beyond June, and how fast will that pace of interest rate cutting be after June. I think that's where the uncertainty is with respect to the ECB. But actually, if we were to, say, move to 105 into the summer, maybe, drip down towards parity, I don't think that means that we cannot have any further interest rate cuts because of the weakness of particularly the manufacturing sectors, the weakness of growth. And when we look at the budget positions in Europe, the new rules for the Eurozone, there's going to be several countries, including France, including Italy, that have budgetary constraints on them, and that means slower growth. And when we have an environment of slower growth, well, a weakened euro could actually be quite useful. So I don't think a softened euro is a big problem for the ECB at these sorts of levels.
Yeah, Jane, we've heard plenty of doomsdays about what happens if the Fed doesn't cut and the ECB does, so it's refreshing to hear that point of view. Jane Foley, thank you so much for joining us. Jane Foley of Rabobank. Now, Manis, let's get to some of the other top stories that are trending on the terminal this morning. Donald Trump faces a cash crunch as his trial costs mount. According to campaign finance filings, Trump spent $4.9 million on legal fees in March and has just $6.8 million left in the accounts he's been using to fund his lawyers. Trump could seek to raise more money from donors or ask the Republican National Committee to cover the costs. Trump returns to court later today.
Volkswagen employees at a Tennessee factory have voted to join the United Auto Workers. It's a landmark victory for the union organizing in the long hostile U.S. South. If this result formally certified by the agency, Volkswagen will be legally required to collectively bargain over working conditions and compensation at the plant.
U.S. Commerce Secretary Gina Raimondo says Huawei's latest phone shows that China remains behind on cutting-edge chip technology. Huawei unveiled a smartphone powered by a homegrown chip last August. In an interview with CBS, Raimondo downplayed the company's claim of a breakthrough, vowing to take the strongest possible action to protect U.S. national security.
And U.S. bill forcing TikTok's Chinese parent company ByteDance to sell up could become law within days. The legislation was included in a crucial aid package for Ukraine and Israel, passed by the House over the weekend. Sources tell Bloomberg that ByteDance intends to fight the effort in court if it's enacted. The company is also said to be planning to remove a key executive responsible for convincing the US that it's doing enough to stave off national security concerns about its connections to China.
Man, speaking of which, coming up, the U.S. House gets a $95 billion aid package across the finish line. We're going to have more on that ahead.
And as it grapples with falling sales and intense EV war, Tesla cuts prices in a number of global markets, including China and Germany. More on this story right here on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Brief. I'm Danny Berger alongside Manish Cranny in New York. Now, after slumping sales and an oversupply of inventory, Tesla cut its model prices over the weekend in both China and Europe, as well as some driver assistance software in the U.S. Joining us now is Bloomberg's Craig Trudell. So, Craig, among the many things that's happening at Tesla, we now have another moment where they're cutting prices again, potentially fueling another price war, especially in China. Is there a clear reason behind this, and can they really juice more growth out of higher volumes?
I think it is really hard to follow here, because if we go back just a few weeks, Tesla for a while was, sort of advertising like a temporary $1,000 price cut, and sort of, come and get your Tesla now because prices are going up. Now prices of the Model Y, for example, have actually dropped, back not only back to where they, increased prices at the end of the quarter, but below that level, back to as low as they've been. There's real, challenges with sort of coming to grasp with what the heck is going on here. And, I do think that there are, very valid questions of just how much more volume you can get out of the Model 3 and the Model Y, even with, more discounts, in the sense that, if I'm a consumer, why would I want to go out and buy a Tesla now and sort of catch a falling knife? There's a real question about where the floor is for these vehicles.
Craig, good morning. The distance between genius and strategy is often debated. Is this company, where are we with Elon Musk? I mean, we're hanging our hat on robo-taxis on August the 8th. We are canceling meetings in India, which is the future. Genius or chaos at the moment?
I think you have to lean toward chaos, just in the sense that, you know, there are people who will defend this, you know, pivot that Musk is making to robo-taxis, that, you know, the reason you invest in Tesla is for, you know, moonshots that, you know, everyone says is impossible, but only Elon Musk can pull it off. And, you know, you've made some good money if you've made those bets in the past. I think robo-taxis, though, is a really difficult proposition for investors to wrap their minds around, in part because Tesla has been pursuing these for, you know, at least 8 years, and it's really difficult technology. There are questions about, you know, whether it's going to be ready not only years from now, but a decade from now. And, you know, you only have to look as far as, you know, Google and the amount of investment and commitment that they've put into this technology and this business proposition, and see this idea that, you know, this is fits and starts. It's challenges working with, you know, state and local regulators. And this is not, you know, a situation where, you know, Musk will be able to sort of put fully self-driving cars and just, you know, kind of throw his hands up and say, you know, I'm done. This is something that's going to take significant investment, a lot of execution risk.
Craig, Danny and I were just talking about this morning. You know, we sort of hold things up in the sky and we go, well, there you go, robo-taxis. But to scale robo-taxis, you need a hell of a lot of global regulation to let those things go up in the sky, don't you? I mean, you can do it in Dubai, maybe, because it's new and it's got this space, but downtown London, I don't know.
Yeah, I can't imagine that in New York either, something like that rolling off. I mean, they've tested it throughout the U.S., have they not, Craig? Different companies trying to roll that and have had regulatory pushback when things go awry.
Yeah, and I go back to this idea that, you know, the U.S. Absolutely has sent these signals like, look, we don't want to get in the way of this technology that has the potential to make roads safer. And yet, you know, I go back to, you know, the example of Uber years ago when the then governor said, you know, we have open arms and open roads for Uber's self-driving vehicles. All it took was one fatality, and I don't mean to sort of diminish that death, but it takes one fatality and boom, the governor says, all right, that's it, you're done. That is the sort of challenge that it lies ahead if this is the pivot this company wants to make.
Okay, Craig, I think that's a very good consolidation in terms of the risks, the real risks. Craig Trudell, and of course you can catch the big take, everything that you need to know on that. Snapshot of bonds. It is counting down to, it's going to be a heck of a week because we're counting down to PCE on Friday. And the road to hell, as I say, is often paved with good intentions, Danny, that's for sure. I don't know what level of hellish bond market you're going to have to do now.
I thought you were going to say the road to hell is paved with treasury auctions.
Well, there is you can have that. There's a bit of supply. Would you like some 2s, 5s, 7s?
Yeah.
I'd say I'm probably more in the market for 7s or 5s. Belly of the curve. You'll hear all the notes will come in and tell you that real money wants to buy 5-year paper. Belly of the curve. That's where you want to be.
Yeah, we have. So we all those auctions.
I'm front running the notes.
Also, don't forget, Manus, we have Bank of Japan on Friday too.
Yeah.
Strap in, and tech earnings. We're going to discuss all that coming up.
Hell of a lot of tech earnings. Okay, there's your bond board for you. We're taking slightly higher. Monday morning, setting the agenda for you on Bloomberg Brief.
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So
I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock?
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and when the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be
We're
important.
going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Monday edition of Bloomberg Brief with me, Menace Cranny, and Danny Berger alongside. We've decided to bring you the front pages and look at what's making the headlines around the world. First up, you've got the $60 billion aid for the U.S., throwing a lifeline to the Ukrainian military, Danny. Now, this quickly reaches the front lines. That's the question. Bloomberg reports that the aid will be helpful. More is needed, and that's according to the research fellow. Of course, huge political implications there on Capitol Hill for the speaker.
Yes, and certainly some comfort for U.S. allies. Next up, Manus, the New York Stock Exchange is testing the waters for trading stocks around the clock, so 24/7. There's a growing interest in overnight tradings. This comes from the FT, and they're reporting that the exchange data's analytics team has put out a market survey. This reminds me, did you ever see that ad for Interactive Brokers where two people are on a date and the woman is like, hang on, while we're having wine, let me just do some hedging trades. That's what the world is going to become.
That's actually what she did on her current husband. She said, excuse me, I've got a few trades to make. Look, it's about capturing market share. That's fundamentally what it's about. And again, going further and deeper against LSE and the other bourses around the world. Now, to UBS, we've been tracking this story obviously constantly. It's about the job cuts. There will be 5 rounds of job cuts. They will start in June. This is according to the Swiss newspaper, Sonntag, as the cost-cutting measures at the lender post the Credit Suisse integration. UBS has declined to comment. It was a Reuters report, but of course, Danny, this goes back to the scale of what they've got to do. Globally, we understand 30 to 50,000 jobs overall, but this is about the Swiss component of the business, the politically most sensitive probably.
Yes, and I pulled out a quote from the Sonntag report saying that, quote, in total, this is according to someone they didn't name, 50 to 60% of ex-Credit Suisse staff will probably be laid off in the next 50 rounds. 50 to 60%, Manus.
Well, this goes back to Colin Kelleher, the chairman of UBS, who at the time, FT article where he talked about the culture filter, which was about cultural contamination. A lot of the bad actors had already left. This is now about the reality of integration of CS into UBS.
Yep, next rounds, August, September, October, November. What a run up to the holiday season.
Tough, very, very tough.
my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Or other authorities.
We could face bigger challenges.
It was going to keep Great World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
From our global headquarters in New York, I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
The U.S. House approves $95 billion of aid for Ukraine, Israel and Taiwan, ending a 6-month political impasse. Investors look for an AI-powered rebound on Wall Street as a slew of big tech results arrive this week. And Tesla spends the weekend cutting prices ahead of the crucial earnings report tomorrow.
So we get Tesla tomorrow, Manus. We're going to have 4 out of the Mag 7 reporting this week. U.S. futures are higher this morning, but it was a tough week last week for tech. They're worse in about 18 months. How do earnings shake things up? 10-year yields, they are higher this morning, about 3 basis points. For the macro event, we're going to have to wait until Friday until we get PCE and a whole lot of treasuries, mostly the front end and the belly of the curve. Finally, oil, despite another round of news continuing to come from the Middle East, besides Friday having that retaliatory reported attack from Israel to Iran. Brent crude is significantly lower. We're down by about 0.8%. It's down 3.5% on the week. That is its worst week since early February. It is an uneasy calm, to be sure, at the moment, with new sanctions coming onto Iranian oil from the U.S. And it's interesting, Manus, you listened to Francois Villeroy over the weekend saying that even if Brent crude were to move higher, that does not dissuade the ECB from going at a hike in June. It's the differential, and nothing seems to be able to stop it.
And then, as Jen Foley said, it's about the speed of travel. How quickly do you break from $90 to $100 if that's the direction of travel? By the way, positioning on the oil market, net longs, Brent net longs are at a 3-year high. So the market is still gearing up for a long position, but it's going to be a monster week. I mean, what is it? 40% of the market reports this week, $18 trillion worth of market cap. And I'm fascinated by NVIDIA. It tanked by 10% on Friday.
Yes.
Small reprieve this morning, but, you know, where are the notes in my inbox telling me that it's a correction?
Yes.
And I should be buying the dip?
Wait, this is the incredible thing, is we were so excited about the way up for NVIDIA, and I feel like the way down has just been a blip. There hasn't been either a big deal made out of it or everyone clamoring to buy the thing.
Yeah, but then this is all about tail risk, which plays perfectly to what our next guest is talking about.
Yes, and to that point, Manus, our next guest writes that the most notable change in options market is that the left tail is waking up. Joining us now is Amy Wu Silverman, head of derivative strategy at RBC Capital Markets. Amy, I remember last time you joined us a month or so ago, you said the right tail is the new left tail. All anyone wanted were upside hedges. So what's changed?
has been the biggest change. Good morning. You know, for as long as I can remember this year, it's been all about the right tail, about that FOMO and MOMO. And I really think the biggest inflection point difference is that left tail is waking up. And, you know, I just want to say one thing. Look, it's not that NVIDIA hasn't sold off before. We've seen that happen. It's the first time, though, in options where that left tail has picked up because of it.
You're crushing my dreams there. I'm hoping for a big response on NVIDIA and a clamor and a clamor of people coming in. How do I mean, look, we've had these moments. We've had 4.5% drawdown, 6 sessions in a row. To what extent has that repriced the left tail risk? Or would you say, Amy, look, Manish, you can still buy put spreads. You can still do something active which has value to protect yourself. You know, this market is not exactly crumbling, Amy. It's merely taking a breather.
You know, that's exactly right. And sometimes I think the best thing to do is, you know, take that year-to-date chart of that left tail waking up and pull it back 5 years, pull it back 10 years, look on a historical basis, that left tail, that idea of owning puts or put spreads on your S&P or VIX calls, what have you, it's still incredibly inexpensive. We're talking about 25th to 30th percentile on a longer dated average. It's just simply year to date. It looks so expensive because that just hasn't been something that folks have focused on. So, you know, look, 99th percentile year to date, sure, but on a broader history, can you buy portfolio insurance? Absolutely. And that's what we're saying you should do if this is a concern.
And as you mentioned, Amy, people did it with NVIDIA, and that seems to be what's changed. Again, as you pointed out, just from the other sell-offs we've seen, put volume on Friday for NVIDIA was its highest since 2007. Is this a sentiment shift? Does this say something wider about the enduring nature of the sell-off we saw last week in NVIDIA, and again, more broadly, chip stocks, because also puts on TSMC, similar story?
Yeah, I'd say there are 2 critical things to think about here, Danny. The first is, you know, one thing we talked about last month was this idea that momentum begets momentum. So when that momentum train is going, you really, really don't want to get in front of it, even if that right tail looks really expensive, because there's so many exacerbating factors that perpetuate momentum. I would say that's severely flagged. And the second thing I would say is, in terms of NVIDIA, it's just about weightiness. You know, so it's this idea of maybe positioning wise, people have gotten long, people have dipped their toe in the water, they've jumped in the pool. So of course, there's simply more to hedge, but there's also this idea that if tech goes, the market goes. It's not only been a proxy for AI, it's just been the heaviest market weight for components like QQQs or XLC.
Manis, here's the fun fact I got for you, what Amy is just talking about. Okay, NVIDIA falls 10% Friday. It contributed to 0.9% of the overall loss in the S&P 500 on Friday.
Yeah, but that plays to what, Amy, you've just said, which is where tech goes, so, you know, so the whole index goes because of the concentration risk. I'm just looking at UBS flashing across the screen here, cuts its view on the big 6 tech stocks to neutral from overweight. I mean, there is justification in breadth. There is justification in going for breadth, and that's been one of the narratives that we've seen through this quarter. When you look across the other Magnificent Seven, you talk about Meta, and of course 2 of the big AI plays were Meta along with Microsoft, and you talk about Meta being relatively inexpensive to hedge.
Yeah, so I wanted to bring those up because obviously these are companies that are reporting this week, big Mag 7 names. And here's what's interesting on an implied move basis. So essentially we say, look, what's the implicit move on earnings day, since we know earnings day is this week, of the option, and then we just compare it against historical moves. On names like Microsoft and Meta, they actually look okay. I'm not saying they're screamingly cheap, but the reason we're saying they're pretty fair, Manis, is because when you look at Meta over the past 6 to 8 quarters, this is a stock that moves plus or minus 20%. That's not what's being implied right now, but it certainly has the ability to do that. And not only that, because there's such flagship names for the rest of the market, there's also other exacerbating qualities of them. So look, we still think these are options that are fair to own. To the upside or downside, obviously depends on your original positioning, but we don't think they look that expensive in the context of those historical moves.
What about small caps? I mean, these things, again, much to my chagrin.
It's her literal obsession.
It's my own personal Waterloo, some might say, Amy. They continue to get beat up, but you say put spreads can also make sense as well. Why? When already small caps have suffered so much, Amy.
I know I'm sorry. I'm sorry for you too. Look, in terms of small caps, I think it's just this question that our chief equity strategist always points out, which is, they tend to work when you start to actually get into the rate cutting. And the issue is that's not where we are right now. Like when you simply look at a graph of where we were in terms of rate cut expectations a few months ago to now, that's not where we are. And I think that's why, to some degree, small caps are in a little bit of this no man's land, a little bit of in the dead zone. But obviously, their sensitivity to Fed speak is very high. So when you see those puts elevated, they are still attractive as sort of a hedge to that Fed speak. And to the idea that, look, if we potentially get Powell saying even higher for even longer, they still work. And even though we've had that move down, I think that's why it's something that you can still use hedges on to kind of proxy that sensitivity to rates.
Let's throw you a full left tail risk. Do you think the market really has begun to waken up to the possibility of a rate hike? And if there was, how would you best position for, albeit a very, very far left tail risk?
Yeah, look, I don't think the market is there yet, but if that is something you're thinking about in terms of the left tail, this idea that Larry Summers has talked about, as well as a few other people, just the idea that we actually could be facing hikes, this whole pricing of the curve could change. Again, that IWM sensitivity tends to be a good place to go because, again, when rate cuts happen, that's where it tends to outperform, but the vice versa happens as well. And again, just on an overall basis, 10,000-foot view basis, the left tail isn't that expensive. It's simply in a year-to-date context that I think we look at it as pricing so highly.
Amy, I'm on the phone to the broker as we speak. As I said to Danny, I've only got one more major market meltdown left in me.
And maybe we'll get to do those overnight trades soon, Manus. So you can be doing this at midnight on a Saturday. So that's exciting.
Can't wait. Amy, thank you very much. Repricing the left tail risk. Amy Wu Silverman of RBC Capital Markets. Coming up, the U.S. House gets a $95 billion aid package for Ukraine and Israel across the finish line. It was a weekend of drama and consternation on Capitol Hill.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The top names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to create index products, and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This aid will strengthen Ukraine and send the Kremlin a powerful signal that it will not be the second Afghanistan.
That was Ukraine's president speaking on NBC's Meet the Press on Sunday. This is the U.S. House approved $95 billion in aid for Ukraine, Israel and Taiwan in a package that included sanctions on Iran's oil sector. Let's get the details with Bloomberg's government, Zach Cohen in Washington. Zach, thank you so much for being with us. The big headline, I mean, it was everybody included here, Ukraine, Israel, Taiwan. Just break down the $95 billion for us. How much of it flows back into the U.S. system and how much of it is real aid?
This is really the culmination of Congress's efforts to address the concerns of allies abroad. It does include about $60 billion geared toward Ukraine. That's the broad majority of the package, 2/3 of it, as well as aid for Israel as it's in its sixth war in Gaza and in the face of these attacks from Iran, aid for Indo-Pacific allies, especially Taiwan, in the face of Chinese aggression. It also includes legislation that would force the divestiture of TikTok by its Chinese owner, ByteDance. And so certainly a smorgasbord here. For the U.S., there's specifically $14 billion that would go toward backfilling some of the weapons that had already been sent to Ukraine. And so this is going to go directly to the effort of defense contractors to build up weapon systems for the U.S.'s stockpile. And so certainly enough for everybody here that creates it much more politically palatable for Congress that's been really divided on this issue for months now.
Yes, and Zach, to that point, I mean, it's huge for U.S. allies. We've continued to have the conversation, especially with European leaders, are you ready for Trump 2.0? But this conversation will now happen in the context that there is U.S. support there, besides, for example, Mike Johnson having to contend with the most far right of his party. So is Johnson safe now? What does it mean for him to put their concerns aside and move this forward?
The reason this bill was delayed as long as it was precisely this concern that Johnson, who's fairly new into this job, was only elected as Speaker of the House back in October, would face a motion to vacate the chair or to oust the Speaker, essentially, if he brought an aid package to Ukraine that didn't include some sort of policy provision that would bolster security along the southern border with Mexico. Remember, there was funding for the border with Mexico in the original package that the Senate passed and that the White House requested, but there was this bipartisan deal that fell through and Republicans thought it wasn't tough enough. And Johnson basically said, look, we've got to move this aid to Ukraine. That's the most important part, especially in the face of these attacks by Iran on Israel. That created additional pressure to move the Israel portion of this package. And so Johnson ended up working with Democrats to pass this package in a rather historic move, actually. Procedurally speaking, you don't see this often where Democrats and Republicans work in almost a coalition-style government to get a package of this size through. Yeah, and there was a vote that showed that the majority of House Republicans actually still oppose Ukraine aid, but at the end of the day, wide bipartisan majorities and majorities of both Democrats and Republicans supported sending it to the Senate.
And I think that's perhaps the most the most interesting sort of fact here is that more Republicans voted against further aid to Ukraine because in many ways, the ultra-conservative voice of Marjorie Taylor, I think, sums it up on the extreme side, which is nothing has been done to secure our border or reduce our debt. This is what she said on Saturday. Ukraine is not even a member of NATO. Now, that is on the extreme right side of the party. But to what extent, then, do you think the reality is that Speaker Johnson now could lose the speakership or certainly will be challenged for having almost gone against the right of the party?
Congresswoman Marjorie Taylor Greene has filed a motion to vacate the same procedural mechanism that ousted Kevin McCarthy from the speakership last year. Of course, we have not seen the votes materialize yet in order to do that. There are two other Republicans who have since said, since this package was brought to the floor, that they would vote to oust Johnson from the speakership. But Republicans are very wary about that move, given the fact how long it was to find a replacement for McCarthy in the first place. And Democrats have offered some assurances that they would provide some procedural help to keep Johnson in the job in some way, maybe not voting for him as Speaker directly, but maybe tabling this motion to vacate. And so that bipartisan support for this move procedurally across the spectrum is what gives Johnson the cover in order to move this package. Now, whether Johnson remains Speaker next year after Congress has new elections and reconvenes in January is a different conversation. But at this point, there was enough bipartisan buy-in for this package and for at least giving the Johnson the political cover in order to do so, that the calls by these three members, which in a narrowly divided House normally might be enough to oust somebody from the job, probably won't cut it this time around.
Yeah, well, I'm sure we'll be having that conversation sooner than we all think. Zach, thank you so much. Zach Cohen of Bloomberg Government. Now, within this bill, there was everything. There was also TikTok. The U.S. House is out with that bill, again, part of it requiring TikTok's parent company, ByteDance, to divest its stake in the social media app. The legislation, again, it was put out Saturday, is tied to the aid package, and the Senate is expected to vote on it in the coming days. Let's get the tech perspective now. For more, let's bring in Bloomberg's Alex Webb. Alex, this is something that TikTok had spent a lot of time and a lot of money lobbying against, and yet here we have this unprecedented move for the U.S. government to dictate the terms of a giant tech company. So what now?
Well, if it passes, of course, as you say, there's a vote in the next few days. The president has said he will sign it into law if it passes through the Senate pretty quickly afterwards. It gives ByteDance, the parent company of TikTok, a year to divest it. We don't know what that would look like, whether it would be a sale, maybe an IPO. And if it doesn't succeed in doing that, then TikTok will be banned from the US. Now, ByteDance has said, TikTok has said, that it will challenge this in the courts. There are some legal experts who think that it may have a chance of succeeding in blocking this bill or law because of free speech rules. We'll have to see what happens. It's clearly going to be a contentious and long fight. The key question actually is whether the relevant judge in this instance will put a hold on this law coming into effect, or say it proceeds, the timer starts, when the law is passed, as these legal cases play out.
I mean, what's the reality of this, Alex? Divesting, ByteDance divesting TikTok. What value does it have here in the United States of America? There's that story that Steve Mnuchin putting together, a band of bidders. But what is it that would be split away from ByteDance if this goes through?
Well, there's some debate about whether they would actually have the core IP, the core intellectual property, which is the algorithm that drives the whole thing. Whether they might have to license that from ByteDance, whether they would have to somehow recreate it themselves. Don't forget that Donald Trump tried to do this 4 or 5 years ago. At that time, there was a lot of interest from American companies. We heard the names like Oracle. We heard Microsoft would be interested in buying it. There are a lot of big tech companies out there that don't have a social media division and might quite like one. Don't forget that Google sort of has one with YouTube. Obviously, Meta, that's its entire business. There are other players who might want to have a look. The price is perhaps a little bit lower than it was before. The multiples in the ad tech space have come down a little bit. And without knowing for sure what exactly they'd be able to buy, and clearly this is a fire sale if it were to go through, it does look like it could be a deal for someone.
In the meantime, Alex, there was reporting that the U.S.-based general counsel for TikTok is going to be stepping down. Again, that's something that TikTok has disputed, but reports still nonetheless suggest that. Even if this doesn't go through, Alex, there's already clearly going to be some shakeup within the ranks. Are we looking at a fundamentally different TikTok, not just in their makeup, but their approach to the U.S. and the U.S. government?
It's hard to tell, right? At the moment, this is the legal counsel. It's not the top executive at the company. This is a company that technically is not a Chinese company. It is domiciled in Singapore. The parent company, of course, in ByteDance, is Chinese domiciled. Now, they have made some significant changes. They have said that data does not leave the U.S. They have invested, they say, something like $2 billion in improved moderation. The thing is that there have been some studies that suggest that maybe if you search for terms like Tiananmen on TikTok, you will get fewer results than if you were to do it on Instagram. TikTok, of course, will dispute that, say that is not the case, but there are concerns about the nature of these content that is being served up to US consumers. The final thing, of course, to remember here, TikTok itself is not allowed in China. China does not let TikTok operate there. It has a separate company called Douyin, which is owned by ByteDance. That serves up a whole different type of content to under 18s in China. So, China isn't necessarily practicing what it preaches when it also criticizes the US for this movement, for this move.
Alex, thank you very much. Alex Webb tracking the amendments to the bill over the weekend on Capitol Hill. Coming up, big week for the Magnificent Seven, to say the very least. It's a beautiful day in New York. We'll talk you through what to expect on $18 trillion worth of market cap reporting. In the United States of America, SPOOs are bouncing back up 0.5%. Context matters on Bloomberg.
Nobody brings you top names like Bloomberg.
The point is that the economy is doing very well in the Netherlands, but the election was very much focusing on migration.
They had made 26 attacks. We'd given warning after warning, but we hadn't taken action.
Parliament has to stick to this and has to comply with the debt brake. The debt brake is really a good ally.
I think we have made addressing inequality a key sort of driver of our policies.
Bloomberg. Context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
It's Bloomberg Brief. I'm Danny Berger with Managed Cranny in New York. Let's take a look at what's ahead this week, get you set up for the trading week. It's an earnings bonanza. We're going to get Tesla first reporting on Tuesday, and then Boeing, Meta, and IBM, they all report on Wednesday. And if that's not enough for you, Manis, we're going to round out the week with Microsoft, Alphabet, Intel, all on Thursday. More than 100 companies in the S&P 500 will be reporting this week.
Yep, it's certainly going to be pivotal in terms of sentiment. Some of the micro movers to keep an eye on as we go into trading today. Tesla and Stellantis are falling as the EV market continues to struggle. Demand weakens. Salesforce takeover talks with the data management Informatica cooled, with both parties struggling to agree terms, according to a person familiar with the matter. Look at the stock down. Salesforce up 3.4%. Those autos are going to be, it's going to be a really brutal and pivotal week for Elon Musk, isn't it? Cutting prices over the weekend. I mean, it's a company, one could say, facing some kind of chaos.
Yes. Well, if you look at what might be his plan, he's cut 10% of the global workforce, says they're going to focus more on robo-taxis, but that is a far away story. That is not the here and the now. And the earnings, they will care about the growth here and now.
Indeed. All eyes down for tech, $18 trillion worth of market cap will hit the tape. We'll take you through blow by blow on Bloomberg.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
The Fed is going to keep rates higher for longer, and that puts more pressure on the economy.
I do believe that the monetary conditions are not tight.
Yes, we're probably going to have slightly higher inflation, and yes, we're going to have higher interest rates, but to us, that's not that bad a problem.
The economy has demonstrated that it can live with these interest rates.
Financial conditions have been tightening to some degree. Overall, the picture remains fairly positive.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
More than 40% of the S&P 500 reporting earnings this week. It's a monster week of earnings. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance. Your equity market on the S&P 500, 6-day losing streak. Can we break that? We're positive by 0.5%. It's all about the Canada this week. It's all about the tech earnings, the Mag 7. Let's go through it piece by piece. Tuesday, tomorrow, Tesla. Onto Wednesday, Meta. Thursday, Bramo, Google, and Microsoft.
To me, it's going to be really interesting to see whether even a beat is sort of a disappointment to markets, because so far that has been the tone. We have gotten the biggest sell-off in the Mag 7 going back to late 2022. Have we already priced out that potential disappointment, and were we set up for a positive upside surprise, or is this a pivot pivot point at a time of a lot of uncertainty.
Well, let's pick out a single name that's facing a lot of uncertainty. Let's talk about Tesla. We're down by 2.4% this morning. I think we're down by more than 40% year to date. And we start this week, AMH, we start this week with another round of price cuts.
Absolutely. A string of bad news is coming to Tesla. And tomorrow they're supposed to report first revenue decline in 4 years. So this is going to be a challenging earnings call for Elon Musk. It's not just the cuts across the board, China, Europe, and the U.S. Really important, though, when you look at their Chinese and U.S. market, but also the job cuts. And the fact that they're trying to basically pin their future on this robo-taxi that there remains a ton of questions about.
Honestly, to me, I just keep thinking to myself, is this really a situation of a car company that is trying to mask itself as something else? And are people going to come to that realization? The fact that we're looking at a 40% plunge in operating profits is pretty substantial.
Tesla coming up in the next 24 hours. Need to talk about the bond market as well. Yields a little bit higher here by a single basis point on a 2-year, on a 10-year up by 3 basis points. Let's call it 466. Last week, the week when Fed officials wondered out loud, are we restrictive enough? It finally started to happen. The conversation began to shift.
And frankly, they were just following the market. And it didn't actually disrupt the market as much as I would expect, which really just highlights how much the market has already priced out cuts and done the Fed's work for it. The big question over the weekend is, does this Federal Reserve need to completely change its communication strategy? Because right now, it ain't working. And I think a lot of people would agree with that.
You called it the pivot on the pivot last week.
She calls it the U-turn. And to me, I'm just thinking to myself, you know, you can call it whatever you want. The big issue is they're losing credibility because their communication strategy is failing.
All means the same thing, doesn't it? They've had to go around in circles over the last few weeks or so. Let's kick it off with a price action. We've talked about the bond market. Let's go to equities. Equity futures on the S&P 500. Look a little something like this. Positive on the session, coming off the back of a week of losses. We're up by 0.6%. The NASDAQ 100 coming off the back of its worst day of the year. Tech on Friday. Bramo absolutely hammered. Nvidia down by 10%.
And it was because Super Microcomputer announced its earning date without forward guidance, which, again, to think that that torpedoed everything and those shares were down something like 0.25%. This is what we got set up for this week. First of all, we don't have Fed speak, which I think is important. Earnings take center stage, front and center. 178 S&P 500 companies reporting earnings. As John was mentioning, we do get Tesla on Tuesday, Meta on Wednesday, as well as Microsoft and Alphabet and a little bit of Intel on Thursday. How much does that set the tone? When it comes to the data, it is all Friday. We get the PCE and the personal spending and income report. How much does this confirm the reinflationary narrative that we get? And in the absence of Fed speak, we get auctions. And I just want to say a lot of people are focused on these auctions. They are record auctions. $69 billion of 2-year notes on Tuesday, $70 billion of 5-year notes on Wednesday, and $44 billion of 7-year notes on Thursday at a time where yields are at the highs of the year. And are the buyers going to come in?
A ton of supply a little bit later this week. A little bit later this hour, coming up, Dean Kernert of Macro Risk Advisors with Mag 7 earnings on deck. Terry Haynes of Pangea Policy as U.S. lawmakers take aim at TikTok. And Al Salinas of RBC on King Dollar's big rain. We begin with our top story. U.S. stocks looking to bounce back from the worst week of the year. Dean Kernert of Macro Risk Advisors saying this: I'm more diversified than I thought I was. Said absolutely no one amidst the market risk-off event. Dean Kernert joins us now for more. Dean, wonderful to catch up with you, sir, going into a critical week for earnings from big tech. Let's just talk about the performance of Mag 7, the tech cohort that's dominated this market for so long. Dean, what are you learning about what's happening there?
Yeah, I think the performance, obviously, of Mag 7 has been unbelievable. I think what has been even more special in terms of owning this particular group of stocks has been the correlation properties of the stocks. They've been incredibly strong in terms of their performance, but they've also been unusually, and I would say unsustainably low in terms of their correlation with each other. When we look at the volatility of the S&P, we're looking at two things at once. One is the volatility of the stocks in the S&P, and the second is the correlation of those stocks. You just mentioned Nvidia went down 10%, basically on nothing on Friday. Apple was just down 1%, and Microsoft was down 1%. If we go back to the big upshock in Nvidia earlier this year, that 16% up move, that was also really in isolation. And the quote you read from me, Jonathan, was really just this idea that I think what happens over time is that investors tend to, certainly they price their risk. They price how much they own based on the realized volatility of that asset. And as I said, the realized volatility of the S&P 500 has been unusually and unsustainably low because of this incredibly muted level of correlation across these, 3 or 4 stocks. And I think that's really the fragility in the market, is just this idea that these stocks just move in isolation, that there's no macro factor that's going to drive the performance of the stocks. I think that's a vulnerability for investors.
Dean, given that vulnerability, is that why you're still advocating for downside protection?
Yeah, so the market's going through a transition right now. The VIX popped up to 18 to 20. It's a lot higher than it was, but obviously we've seen periods where it's been considerably higher than that as well. I think one of the conundrums that investors have right now is that the increase in the VIX has not really been driven by the daily, the size of the moves in the S&P. The realized volatility is only 10 or 11. So what you have, and it's challenging for investors from an insurance standpoint, is a big spread between the VIX and the realized volatility. And I think that's basically the market pricing in uncertainty on the monetary policy front. You guys reviewed just the Fed's potential, changes in its language. We're obviously watching the short end of the yield curve and how that embeds. It's taking the cuts out of the curve. And of course, the geopolitical risk is something that typically is more bark than bite, but we've got to pay attention to it. And, one of my favorite quotes is from Stanley Druckenmiller. He said, "The best economist I know is the stock market." And I would say I'd broaden that out to just the level of risk premium. You can really learn a ton by just analyzing implied volatility. And I would say, Jonathan, these prices are just singing right now. Gold has rallied substantially, and it's rallied in the face of a stronger dollar. Very atypical. Gold implied volatility is up a ton, even as gold is rallying. These are things that are telling us about an underlying risk dynamic where the market's trying to understand things. It hasn't yet. Still holding this economy up is a consumer that's ready and willing to spend, and corporate profits that have been robust. So I do think that there's a lot to be said about this upcoming series of quarterly reports coming as well.
Dean, you're not the only person who we're going to be speaking to today who suggests that right now, if you listen to the market signals, they are telling you that we are at some sort of inflection point. Michael O'Rourke is going to be coming up later, and he's got a similar kind of idea. What do you think this says about the relationship then between bonds and stocks? Is this a point where higher yields is bad news for the stock market? And frankly, people are not digesting the good news is good news in the same kind of way, meaning that any upside surprise, either on earnings or on economic data, could be problematic.
I think there's something to that at some point the rise in the 10-year and the taking out of these cuts from the short end of the curve in tandem is something that's going to test the stock market's resiliency. Now, remember, if we go to around this time last year, we were post-SVB, and the market actually priced in a number of cuts towards the end of 2023. Those didn't materialize, and the stock market did quite well. So it's not, it's not for sure that if the Fed's got to stay the course in terms of, keeping rates where they are, that the risk asset complex buckles. The U.S. economy has just proven completely resilient. I think one of the things I just scratch my head every time that is not enough of a part of the conversation around the essentially inability of monetary policy to tame the economy is just the degree of deficit spending. I mean, we're spending 7%, more than we take in during with a 3.8% unemployment rate. It's pretty unsustainable. And I think the issue, for investors is when we look at government bonds as a stabilizer in the portfolios, you've got a push and pull. You've got, as you mentioned earlier, this incredible supply that's coming. I think it's testing investors' ability to take it down. You've got unsustainable deficits that I think are certainly getting a lot of attention. And then, of course, the bond market does want to rally based on geopolitical risk. So I don't know that you're going to be able to count a lot on stock-bond correlation as you have in the past. And then, of course, because you can't, you've got to really focus a lot more on option strategies than just using bonds as a diversifier.
When you take a step back, Dean, and just put it all together, this week we do have these sort of three prongs. We've got the economic data, we have the earnings, which are the sort of true test of the Mag 7, and then we do have those auctions. What are you looking at that can kind of give us a sense of where we're going at this inflection point?
Look, I think price has got to tell us a lot, and I think what you're trying to do is read what the market's telling you. So if you get a bad auction, and we've seen these in the past, where suddenly we're talking a lot more about auctions, and the S&P goes down a lot based on that auction, it's telling you about what a market level of discomfort, right? Of course, the data itself has become critical again. Core PCE on Friday, obviously everybody's going to be watching. Those were big data releases for a period of time in 2022, not so much in 2023. They're starting to become, more critical as well. And again, I think we're supposed to watch these other assets like oil and gold for indication of just market discomfort. And look, what I would just say is 5% two-year note yield. It kind of harkens back to the T-bill and chill strategy, right? You're kind of paid to wait in a way that you weren't for a long time. So I think you're supposed to really, think about what you can earn on the short end of the yield curve, at least for now, amidst a lot of uncertainty in the market.
We've heard that a few times over the last week, that's for sure. Dean, thank you, sir. Dean Kerner there of Macro Risk Advisors. Bramo went through the auction slate this week. Let's do it again. Two-year notes come in tomorrow, $30 billion worth. After that, $70 billion of five-year notes, $44 billion of seven-year notes. There's some record auctions on some of those maturities. Bramo, this was a big feature of the conversation last week. America's deficit, the sustainability of U.S. exceptionalism, the disruption that it could cause the rest of the world.
And a lot of people didn't have answers of exactly what that disruption would be, because no one was about to say, okay, this is it. It's really going to matter, and suddenly the U.S. is going to lose the privilege to borrow and spend recklessly, as some people would say. The key question to me is, you don't know when you hit that threshold. And what we heard from Seth Carpenter over the weekend of Morgan Stanley was basically, we're going to hit an inflection point when it comes to interest payments. We don't know where it is. We're just bumping up against that dangerous point.
And the question a lot of people can't answer, but most of them think it's going to be a market issue that then forces Washington to get their act together, instead of Washington saying, okay, we know this is unsustainable. Look at what the IMF put out, a rare warning about the United States. Let's do something and be proactive. I don't think so. It's going to be a mess in the market that then trickles down to Washington.
Bond yield's very close to the highs of the year. We're high by 3 basis points or so. On a 10-year maturity, the yield at the moment, 4.65. Let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. The New York Stock Exchange is asking stakeholders about their thought on 24/7 trading. That, according to the FT. The survey apparently asked respondents whether around-the-clock trading all week, plus how they would staff the overnight sessions. Regulators are also assessing an application form that happens by a startup backed by Steve Cohen's Point72 hedge fund to launch the first around-the-clock exchange. U.S. Commerce Secretary Gina Raimondo says that Huawei's latest phone shows that China remains behind on chip technology. She was speaking with CBS's News 60 Minutes. Raimondo downplayed the company's claim of a breakthrough. She also said that the tech gap shows that the Biden administration has been successful in imposing export controls on China. And a rare Rolex with a split-second chronograph sold for $3.5 million at an auction, and probably, as you would have guessed, in Monaco. It's a record price for the model. The Rolex 411-3, produced in 1942, is one of just 12 ever made and 9 known to exist. The watch has a case diameter of 1.73 inches, making it one of the largest Rolex watches ever made. That's your brief, John.
Danny, thank you. So financial conditions are still easy, I think would be the conclusion of some people out there. Up next on the program, the clock ticking on TikTok.
The idea that we would give the Communist Party this much of a propaganda tool, as well as the ability to scrape 170 million Americans' personal data, it is a national security risk.
The conversation about that so-called national security risk coming up next, live from New York City this morning. Good morning.
You know what else?
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Earnings season is here.
I think we're all asking the same question.
Just how much earnings growth they're expecting.
Bloomberg is first to break the numbers.
Gilead is coming out right now.
We have Take-Two numbers.
Shares of Pinterest.
Lucid Group coming out with its earnings.
All eyes right now on NVIDIA.
A lot still to come.
With the smartest insights.
How much bigger could profit and revenue have been?
Better than what the street was expecting.
Bang in line with estimates.
We will have full and instant analysis.
Continuing coverage on Bloomberg. Context changes everything.
Attempting to bounce back and snap a 6-day losing streak on the S&P 500. Equity futures positive by 0.6%. Yields a little bit higher by 3 basis points. 4.65 on a 10-year. Lisa said it earlier. The good news, no Fed speak. It's the quiet period. The Federal Reserve decision the following Wednesday. Next week, Wednesday. Just a week or so away. Bond yields 4.65 on a 10-year. Under surveillance this morning, the clock ticking on TikTok.
The idea that we would give the Communist Party this much of a propaganda tool, as well as the ability to scrape 170 million Americans' personal data, it is a national security risk. The timeline of giving this can be a complicated transaction. To give it up to a full year, I think just from a business standpoint, makes sense.
Here's the latest. The House approving legislation over the weekend requiring parent company ByteDance to divest from TikTok or be banned. The bill attached to an aid package for Ukraine and Israel. The Senate is expected to vote on the measure in the coming days. Terry Haynes of Pangea Policy writing this: we're still of the view that the TikTok issue gets dealt with by year's end, but the how matters in the Senate, where the debate has been outright ban versus letting POTUS investigate and figure out specifics on TikTok or any other similar website. Terry, a good friend of this program, joins us now for more. So, Terry, you've got to help me out personally. And for anyone else out there who's confused, what is and isn't going to pass in the Senate?
Well, the aid package certainly passes. Ukraine, Israel, Indo-Pacific, read Taiwan. There's also an awful lot of sanctions and foreign policy matters that pass, which I view as a congressional rebuke to Biden, essentially to get more energy and get moving on foreign policy. Beyond that, on TikTok, I don't think, honestly, we know yet. There are two main approaches. The one is the ban. The other one is, okay, let's give the president direct authority to evaluate websites generally for problems similar to that of TikTok, national security problems. And there's been a debate about that. My instinct is that the wave kind of washes over the people who want that more nuanced approach, and we get right into the full ban. But that's very much a live ball in the Senate, and I don't think we're going to know for a couple of days which approach actually they're interested in taking. If that's the case, it complicates things, because then the bill would have to go back to the House for final passage.
Terry, in the provision, they extended the amount of time TikTok would have or ByteDance would have to sell or divest from 6 months to 1 year. Does that help its chances in the Senate?
Yeah, I think it probably does, Anne-Marie. You played Senator Warner on the bumper, and he's absolutely right. This is looked at as much more of a fairness and business case matter than anything else. Nobody's trying to shut off TikTok tomorrow, and it's important for senators to be able to say that as they're voting.
You say you're still in the view that the TikTok issue gets dealt with by the end of the year. Do you mean dealt with in Congress or dealt with altogether? Because this looks like it's going to have a tremendous amount of legal battles ahead.
Yeah, I mean, in Congress, the posture of the United States government on TikTok and what they're going to do about it. The legal case, frankly, I will tell you, I think is overblown. The short strokes are that the site somehow has First Amendment rights and all the rest. This is very much uncharted territory legally in the United States generally. But what the First Amendment fundamentally focuses on are the rights of individuals to speak, and nobody can, nobody's rights to speak on the internet are going to be negatively affected if they can't do it on one of a billion sites.
Terry, if I were cynical, I would suggest maybe the 1 year time frame pushes this past the election, where this becomes an issue that has been dealt with, where no one feels the consequences if they are younger and they use TikTok. Is that part of the reason why things were extended to a year?
Well, I'm pleased you're not cynical, Lisa.
Thank you. I appreciate that.
The short answer is yes. I do think that's a consideration. I also do think that the business case is the primary reason, but accusing United States senators of politics is not a particularly controversial matter, and getting this past the November elections, I think, is politically important for them.
Just talking about the political environment in Washington, D.C., I spent a lot of time thinking about Mike Johnson's transformation, where he was with the camp that didn't want to provide funding to Ukraine, that didn't want to pass any additional spending. And he said that in this article that I was reading about his transformation, he prayed a lot and he came to this conclusion, in part because of certain documents, intelligence documents that he read. Do we have a sense of what intelligence documents really guided some of the decision-making that could put his speakership at jeopardy?
Specifically, no, but there are sort of two things at work on Speaker Johnson, I think. One is the pure national security case, the idea that he got briefed up and from all accounts, everything I've heard, really sought out in just the way you'd want from a senior leader in the Congress, trying to get the best case and the best view of what the national security problems were and what the consequences might be. The other thing, which I think is underappreciated, is that Speaker Johnson is a committed Christian, says so, professes so, and the idea that Russians were torturing Christians became a powerful motivator for him generally, and increasingly the evangelical community in the United States made that case with Speaker Johnson, and I think that was very important, but again, as I say, underappreciated.
Terry, I think we all noticed last week on the sidelines of the IMF World Bank Spring meetings that Russian assets are becoming a much bigger focal point going forward, and more specifically, Russian assets being held in Europe, in France, in Belgium. How close do you think we are to an agreement with the Europeans on how to move forward?
Oh, I think we're very close. You've got remarkable consensus in the United States Congress on this in a way that didn't exist 2 or 3 months ago. Frankly, the administration is pushing hard to try to get some sort of a modus vivendi on this, and I think the Europeans are similarly motivated. So you're looking at the continued weaponization of this sort of thing in a way that hasn't existed in about 80 years, really.
Getting closer and closer to an agreement. Terry, thanks for hosting us last week. It's good to see you. Terry Haynes there at Pangea Policy. Terry Haynes down in Washington, D.C., following the IMF World Bank Spring meetings last week. AMH, you got a feeling we were getting closer, and maybe getting closer and closer until we get to that G7 leaders meeting in June?
I think it's all going to come down at the leaders level, because there's a lot of different ways on how to get the money from those assets to Ukraine hands. And a lot of Europeans you speak to, though, are concerned about the precedent that this would set, even though they are being pushed by a lot of U.S. officials to come to an agreement. So a few more weeks, and then at the end of the day, the leaders will decide.
Some of them are incredibly nervous, as we know. Equity futures on the S&P 500. If you are just joining us, welcome to the program. Positive here by 0.6%, just a little bit of a lift. If you're looking to the bond market, yields are higher by 3 basis points, 465.18. Coming up on the program, Tasnim Ghirwadwala of Citi. That conversation just around the corner. From New York City, looking ahead to a week full of tech earnings and a sprinkle of economic data, concluding with the PCE read at the back end of the week. This is Bloomberg.
my general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
When I was younger, I used to be in bands. I'd play drums in bands and toured America with them, did a lot of session drumming, recorded albums. So yeah, it was good fun doing the drumming. The only reason I stopped it, well, I still play, but not as serious as I did when I was younger, but drumming doesn't pay the bills. I was never good enough to be able to pay the bills with it, but it was good fun. I started RJF, and the reason I started it was I saw a gap in the market for particular early stage and startup businesses. With the experience that I've got of running businesses, of being a finance director at the very biggest companies in the world to being finance director of small startups, we were looking at providing more than just basic accountancy services. So yes, we'll do all that, we'll do all the basic, all the statutory side of things that you need to do. But there's so much more value that we can add, and I wanted to have my experience to help these startups, because a lot of them don't really know where to go. You can go to your high street accountants and they can do a good job compliance-wise, but you would question whether they've actually been in the fire line of a business. Have you been in a business where you're thinking, how do I pay wages next week? Or business is really successful, what do we do with it next? Or how do we grow it? How do we grow into international territories? Or how do we grow our markets? How do we expand? So a lot of the experience I've seen over the years and seen different types of business in different sectors, I thought, well, it's a real value that I can add to these businesses as opposed to just being an FD, because a lot of these businesses can't afford an FD. But if we can take care of their statutory side of things, the compliance side of things, I'm on hand to be able to help and advise businesses with their growth strategy, or if they're in difficulty, help them through these times.
Some point, Iran coming out and saying that the attacks or that the strike by Israel on some of its areas was negligible, caused no damage, poop, 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 not a big deal. And other people saying, actually, it came without them looking at it, without them finding it, it sent a really strong message.
It sent a really strong message. What Iran is trying to do, especially to the domestic media consumption, is say, this wasn't a big deal because they don't want to retaliate. That is why this chapter is over and there's calm. But you have to think about potentially the geopolitical risk for the future, which is where you can see maybe $5 or $10 spike higher, what Goldman Sachs is saying, if we get that resurgence.
At the moment, we're softer again. We're down 0.5%, 86.83 on Brent crude. Under surveillance this morning, our top stories, Mag 7 earnings kicking off this week. Tesla reporting after the market close tomorrow. We'll also hear from Meta, Alphabet and Microsoft this week. Amazon and Apple reporting next week. Nvidia, as you know, always at the tail end, coming on May 22nd. Tesla, Bramo, what a brutal start to this year for Tesla.
Given the fact that they haven't been able to perform as well as they expected, in China in particular, their market share dropping to below 7% from north of 10% in terms of market share in the Chinese market. The price cuts that we heard reported over the weekend, which actually were, I think, the fourth or the fifth consecutive price cuts.
I've lost count.
I've lost count. And at this point, how do they get profit margins at a time when they're looking a little bit more like a car company?
Down in the pre-market by another 3%. Elsewhere, the US House of Representatives passing a $95 billion aid package for Israel, Ukraine and Taiwan. The Senate expected to take up the measure as soon as tomorrow. US lawmakers also attaching the ban or divest bill for TikTok, setting it to become law in the coming days. Now, talk about losing count of what's happening with Tesla. I mean, I'm losing count following this. How many bills have been put through just as one bill in the Senate?
Oh, there was at least 4 bills, but it's going over to the Senate as one foreign aid package. That totals almost $100 billion. But if you look at the vote count on whether it was Israel, Taiwan, or Ukraine, you can see what parts of the representatives, what they're more interested in, especially Republicans. There was more of a vote count on nay when it comes to Ukraine than, say, likes of Taiwan. But TikTok, this could be a make or break moment for TikTok. We've had a CFIUS review still undergoing as far as I'm concerned. And there's also been a number of times that you've seen lawmakers try to ban this company. And now it's becoming this moment where, as Terry Haynes says, by the end of the year, this could be a closed chapter before the legal issue.
You say make or break, exactly. I think Bramo nailed it about 15 minutes ago. There's a one-year window to address some of this, as you've just mentioned. This can get tangled up in the courts, and this will be another case of a Chinese company using the Western system against a Western government, because that's exactly what most people assume is going to happen.
And I wonder what the signal is from the general counsel stepping down, who was the person who is dealing with the U.S. government for TikTok. It just raises a lot of questions in terms of, are they going to take a new strategy akin to what you laid out in terms of using the American system against itself?
But that signal to me was really important. It meant that he didn't do his job correctly. If this is the place Congress has arrived at, which means at some point something will have to happen with TikTok.
Could they have lobbied any harder on the Capitol? I mean, could they?
I mean, honestly, what we heard last week, everybody wants to hate China, and that basically this administration's argument to China is it could be a lot worse, so work with us, even as we basically rake you over the coals.
And that's the latest in the nation's capital. Elsewhere, another read on inflation to round out the week. The Fed's preferred gauge, PCE deflator, coming a little bit later this week. Bloomberg survey expecting core PCE to cool slightly year over year to 2.7%. Meanwhile, the US two-year yield hovering near 5% ahead of a trio of auctions and the Fed decision just next week. Tasnim Gilwadwala, following the impact of those and more at Citi, Commercial Bank. And Tasnim, I'm pleased to say, joins us now for more. Tasnim, wonderful to catch up with you. I can just say a little bit about our travels. We've just got back to New York from Washington, D.C. We spent a week, we thought we were going to spend a week at least, talking about the economy. And what we met was a load of economists who were national security experts. Now, Tasnim, I just wonder from your perspective whether you can speak to some of the trends that you've seen evolve that might speak to that, the worries over what's happening between China and the US and maybe other countries too.
Yes, of course. Thank you. Firstly, thank you very much for having me. It's a real pleasure to be here. So, I mean, definitely we are seeing a lot of activity with our clients as they try to navigate the environment, which just seems to be getting more and more intense on the macros around inflation, around interest rates, which are proving to be, definitely higher for longer, and clients eagerly awaiting when the cuts are finally going to come. But as you just mentioned, on the political side as well, lots of things for our clients to navigate.
Tasnim, how much has this actually altered the view for mergers and acquisitions? We were speaking with Bank of America's CEO, Brian Moynihan, and he said it's very difficult for companies to get any conviction to buy another company or merge at a time where a lot of things are being rejected in the name of national security concerns, in the name of antitrust, the name of whatever. You can't predict it. Are you seeing the same thing among your clients?
Yeah, it is a very, very difficult time on the deal front for companies to go about. Although we are seeing some deals close, we've had some sell side opportunities at Citi, and some of our clients have been able to go through the cycle. But lots of things in the way, exactly as you mentioned, and also with the high interest rates, capital to fund the acquisitions are also, another factor that is proving to be a sticking point for our clients, that, it's not cheap anymore to buy another company. You've got to, make sure that it's really worth it, that the valuation, you're not going to overpay, and the valuations are going to be there to see you through kind of the medium and the long term.
Tasneem, a lot of people are talking about this week as a pivot point. We're going to get the earnings of 178 of the S&P 500 companies. You focus on a whole host of smaller banks and smaller companies that have individual challenges and might have an even better view in terms of the direction of travel of both economic strength and inflation. Are the signs that you're seeing consistent with this general feeling that we're going to get a no landing with inflation that's going to run hot for the foreseeable future?
So, I mean, I think one of the things that I think is interesting that we're seeing with our clients is that their balance sheets are actually really, really quite strong. For the vast majority of our clients, we've been supporting them as they think about diversifying. Although the environment is very tough, I think it's also posing quite a lot of opportunities for clients as well. They're really thinking very, very strongly about their supply chains and how they make them more resilient, how they secure, make them very, very secure as well. And I think things like nearshoring, things like diversifying the funding environment for our supply chain. I think these are the opportunities that our clients are kind of playing into. So I think it's not all doom and gloom, quite frankly, where our clients are concerned.
Is that nearshoring due to the market or because of policies and, this urge by certain governments?
I think it's a bit of both. I think, on the supply chain side, I think clients are trying to address things like logistic costs, like ensuring that, their goods actually get there, there's no delays, and manage it from a kind of a cost and a security mode. And then, of course, there's the incentives as well. Last week I was in Mexico, where I actually saw the whole phenomena of nearshoring, like with my own eyes. It was quite amazing how, when large companies, the big MNCs, announce either a new investment or an expansion of a factory, like in Mexico, the entire supply chain kind of follows them there, and a whole kind of ecosystem gets built out around those large suppliers, like Kia announcing the big expansion of its plant in Mexico for EV cars. There's a whole kind of tier 1, tier 2, tier 3 impact around the supply chain with that.
Do you see Chinese firms moving into Mexico? Because that's been a big concern with lawmakers and officials in the United States.
There are a couple of Chinese firms, but I think it's wider than that. We've seen Korean firms as well. We've seen other Asian companies moving there as well. So I think it's more mixed. I think there's, what we're noticing with these kind of corridors is there's a big North Asia to LATAM corridor that is very, very vibrant. And it's not only into Mexico as well, it's also into Brazil and other LATAM countries as well.
Tasneem, what it sounds like is for multinationals it's becoming increasingly complex, and it might lead you to believe that perhaps they'd just stay local and avoid expanding beyond their own borders. You're not seeing that, are you? That's not what I hear.
Absolutely not. Of course, companies want to make sure that they're strong, in their domestic and markets, and they're operating very well. But I think, the vast majority of our clients, and the reason they come to Citi is because they have global ambitions. And so, as they think about how they're going to grow themselves and how they're going to succeed in the market, that more and more our clients are looking at cross-border opportunities as the way in which they are going to grow and access new markets, and that's where a bank like ours can really help them.
Can we just talk about, just finally, how that growth is being funded with interest rates near multi-decade highs in some regions, including here in the United States? Are the sources of funding shifting, Tasneem? Have you noticed that?
Definitely. So I think one of the first things I'm going to say with such high interest rates for quite some time now is that clients are really getting absolutely focused on their own liquidity and looking at any kind of trapped cash that they may have, looking at very sophisticated, even mid-market clients that, probably didn't pay that much attention as closely to their liquidity as, say, some of the very large clients would traditionally be doing. They're paying a lot of attention to ensuring that they're efficiently using all the sources of capital, that payments are like SWIFT, Their collections are really quick as well, and that whole cash conversion cycle is as tight and as efficient as possible. And of course, we've got lots of solutions that can help with that. But I think there's other pools of capital, of course. There's bank funding, and then we're also seeing the rise of private credit as well, as coming up as being a kind of complementary to bank funding for these clients. So lots and lots of kind of innovation happening on the financing side.
Has that innovation led to basically an environment where higher rates have not crimped the expansion plans of a lot of these companies? That even though it might be more challenging, you have to be innovative, it's just as available in terms of credit creation to go out and to expand.
Yeah, I think so, Lisa. I mean, I think, what we're seeing is that with companies that are strong, they are just getting stronger, and high rates and even just general geopolitics don't tend to kind of take the wind out of the sails of these types of companies, and they do use almost kind of volatile environments to get even stronger and look for opportunities to expand, pick up, sort of do small. We're seeing a lot of mid-market companies like doing not like big transformative kind of deals, but small bolt-on M&A, like picking up a kind of a $10 million company, $20 million company, adding a particular expertise. Those are some of the things that we're hearing a lot from our clients.
Interesting. Tasneem, let's do this again next time you're in New York City. We'd love to have you with us around the table. Tasneem Giawadwala there of Citi, breaking down what's happening with some of the lending going to multinational companies, Bramo. And we've said it a few times. Would you stay local given the complexities abroad right now? Not what you heard, just there.
And not what you heard from the IMF, where they found that global trade is just as robust, it's just as perhaps different places. Also, what we're hearing is this a sufficiently restrictive interest rate environment? I don't know. It doesn't sound like it, based on the fact that companies can keep on borrowing and keep on transacting just in more creative ways.
Based on that, they're not being held back. Equity futures on the S&P 500. If you are just joining us, welcome to the program. Positive here by 0.5%. Let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Donald Trump spent $4.9 million on legal fees in March and has just $6.8 million left in the accounts he's been using to fund his lawyers. That, according to filings. Trump returns to court later today. Classes at Columbia University will be virtual today after reports of anti-Semitic statements and actions on campus. Anti-Semitism at the pro-Palestinian rally is drawing backlash from members of Congress and the White House. Columbia's president said leaders would meet today to discuss a way to end the crisis. Tesla announced price cuts across China, Europe, and the U.S. over the weekend. Now the risk of yet another price war is growing. Li Auto has been the first to respond with discounts and cash rebates on new models in China. Tesla has also slashed the price of its U.S. driver assistance software by a third. And that's your Bloomberg Brief. John.
Hey, Danny, thank you. Up next on the program, the strong dollar, here to stay.
The point is, if even Japan and Korea are losing ground against the dollar, this is a wave. And my fear is it just goes up from here.
We heard a lot of complaints in Washington just last week. We'll talk about them up next on the program. Live from New York, this is Bloomberg.
Timelessness and sustainability go together, right? You can't expect to be timeless if we're run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more, that younger consumer we're talking about, they want to work for companies that care about this planet, that do more than just kind of generate revenue and profit. You need sustainability to attract consumers. More and more, including that younger consumer, they care deeply about what are you doing differently? How are you making a difference? Investors, particularly in Europe, more and more place value on what you're doing in sustainability. Many of our partners have expectations on sustainability.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know?